Real-time news on the hour, every hour.
Good evening, good afternoon, good night, depending on where you're trading in the world. I hope you guys are enjoying this Altseason. It's the 29th of December, and that means that there's just 3 days left in the trading year of 2020. Here are your headlines. Cover protocol, the smart contract insurance protocol was hacked, but in a bizarre turn of events, the hackers then returned the funds. We're going to take a look at exactly what happened there. And as Bitcoin's price takes a breather, Grayscale reports that their net asset holdings are over $19 billion. Tonight, we're going to take a look at exactly what Grayscale are holding. And while Grayscale are boasting about their holdings, the woes continue for XRP as Coinbase and Crypto.com both begin the deregistration process for US holders. We also get unconfirmed reports that the head of investor relations for Facebook is now leaving to join Coinbase. And Jerome Powell is crowned Forbes as Crypto Person of the Year in the first time they're doing a Crypto Person of the Year. Then later in the show, we've got a huge segment that I'm super excited about. We're going to be speaking to Charles Hoskinson, not about Cardano, but about his outlook for 2021. And I'm going to try and push him for what he's putting in his portfolio other than ADA and ADA related projects. And then we promised you small cap gems. And today, I think we found one. Imagine being able to do margin trading and leverage peer-to-peer on Uniswap assets. And that's exactly what Unimex does. We're going to be speaking to the team from Unimex later on tonight. And then the biggest segment of the show, I've got a big surprise for you guys. The small cap gem hunter himself, ELLIOTRADES, is here to speak to us about what his picks are for 2021. He believes that that ETH can make you rich, but gems can make you ETH. So we've got a huge show for you tonight right here on CryptoBanter.com, the only station that brings you live trading information for crypto enthusiasts. This is where you call the show, you bring the banter. We've got a big show ahead of us. I look forward to catching up with you just after the break.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
Yeah, that's CryptoBanter.com, and that's, again, where you talk crypto. If you've just logged in and if you enjoy this content and if you want YouTube to shill your bags, all you got to do is hit the like button, hit the subscribe button now. Remember, guys, the more you hit the like button, the more you hit the subscribe button, the more the YouTube algorithm sends our show around the world, and that enables us to bring you and fellow crypto enthusiasts live crypto content from around the world. Also, this is a call-in show. This is the only show in the world where you are encouraged to call in and to bring the banter. Tell us what you're holding. Tell us what's in your bags. Call in, speak to our experts right here live on air. Later on today, we've got Scott Melker, we've got Charles Hoskinson, we've got ELLIOTRADES, and a whole lot of big crypto experts. So you can call in and you can speak to them. All you have to do is go to www.cryptobanter.com. And right there, you can click the button that will bring you straight into studio. And of course, guys, you can remain anonymous. So without further ado, let's get into the news headlines. And of course, the biggest headline was the headline that Cover Protocol, the smart contract insurance protocol, was hacked. Now, this was no ordinary hack. The hack here was what they call an unlimited token minting hack. And what happens here is the hackers who are white, the hackers hacked or exploited the contract to mint a whole lot of Cover protocols. They then got these Cover tokens and sold them on the market for ETH and for WBTC. But then in a bizarre turn of events, the hackers returned the funds to the smart contract. If we look at the story, the hackers, Grab Finance, which are a popular white hacker or very respected popular white hat hackers, wrote this tweet to them and said, next time, take care of your shit at Cover Protocol. And they returned the majority of the funds, not all the funds. Now, if you look at the token prices, you look at the Grab Finance token price, the Grab Finance token price shot up by over 20x when this happened. Unfortunately, the Cover token price went down. Now, the question is, should you be buying the Cover protocol at these levels? Because most people are saying, well, you know what, if Cover protocol has gone down from $1,000 very recently right down to about $168, then maybe this thing is a buy. Guys, I wouldn't be buying this token right now for the simple reason that the Cover protocol announced that they may be taking a snapshot from before the hack and starting the chain back from there, or reimbursing token holders with a new token back from there. So I don't think buying the token at these prices will do anything for your bags. Joining me on the show today is Scott Melker. Scott, we're going to be talking about the rest of the big stories in the news with you here. Always a pleasure to have you, man. How are you?
Doing good, man. How are you?
Good, man. Did you watch the story about the Cover protocol getting hacked?
It was a little bit over my head, to be honest. It was kind of like, Cover wasn't really on my radar in general, so I had to go to Twitter to find out what was happening. I certainly wasn't the provider of information, but I think it's just a great reminder that, with any of these DeFi projects, things being traded on Uniswap, that your stop loss is zero and be prepared for a rug pull. I mean, I don't even care which one it is. It's the case. And the irony that it's supposed to be an insurance protocol that's supposed to protect you from these is not lost.
Yeah, but I mean, look, insurance is a very, very, very important part of, if we're going to create decentralized finance or any type of smart contract, insurance is a very, very important part. And we're just seeing the beginning of these insurance protocols. And, unlike the traditional world, these insurance protocols don't have historical statistics. The contracts are still vulnerable, and we're entering a whole new dimension. So I think these things could be expected. Lots of market commentators have been saying that the insurance companies should be reinsuring themselves. And I guess that's probably what will happen here, what the next stage of this insurance protocol will be.
Insuring the insurers.
Exactly. I want to talk to you about another story, and this one baffles my mind. Maybe you can give me some clarity as to what's going on here. But this is the Coinbase suspending the XRP trading, and that, of course, Crypto.com has suspended, Bitstamp has suspended. I think eToro have or are going to suspend. Those are the rumors in the market. Do you see any case for people to buy XRP today?
Absolutely not. Absolutely not. And it's funny. I was on the Funky Crypto podcast yesterday with Ben Askren and John Kim, and they were sort of arguing about this. Ben believes XRP is going to zero. He's been saying for a long time, and John sort of was of the mind that, hey, maybe you buy the dip. So, there's a notion of buying fear in markets. Of course, it's a famous notion. Warren Buffett's talked about it. Many famous investors, but there's buying rational fear and irrational fear are two very different things. Buying irrational fear is like March, when everything dropped and even good companies lost 30% of their value. That's a deal, right? They're going to eventually go back up. But this is rational fear. When the SEC says that your favorite coin is being sued, that they're potentially a Ponzi scheme, that there was potentially criminal activity by the owners, you just run, right? There's thousands of things that we can buy and invest in. Why the hell would you ever touch this one? There are literally thousands of coins you can invest in, and you want to buy the one that's being sued by the SEC just because you like it? Like, I don't understand the motivation.
Yeah, I also don't understand the motivation. I mean, like you say, there's so many assets that you can buy. It feels like we're going into this huge alt cycle, this huge alt season. And in this alt season, a lot of the new tokens can do 10x's and 20x's. Why would you be buying a token that is number 3 or number 4 on the market cap that isn't really being used today and now has this huge clout from the SEC over their heads? I just cannot make heads or tails of it. But I mean, you've always got those diehard XRP guys who, I think I pulled up 1 or 2 tweets from them today. Let's see if I can find them. The long standard, because we will not comply, XRP. This is where we make our stand, market buying on Coinbase. If you like Ripple at $1, you're going to love it at 24 cents. I think you may even love it at 0 cents.
Yeah, sorry, I'm taking my hoodie off. I'm a little hot. Yeah, that's stupid. That's literally stupid. Like, it's emotional overreaction and an inability to pivot and accept new information. Also, forget even the fact that the SEC is suing them. When has XRP ever gone up that you didn't see coins transferred from Ripple to exchanges to dump on the people that were buying and kill the rally?
In the SEC allegations, they say that market makers were used and to hold up or firm up the price or to create excitement or to release news And then the market sold the tokens. And I think there was a quote or a tweet by David Swartz, Joel Katz, which said that it was common cause. Everyone knew what was going on, that they were just trying to sell the tokens to the public at the highest possible price. I mean, I don't see how Ripple, the company, gets away with all of this. So the way that I see this thing playing out is, I think that Ripple, the company, will get into trouble. I don't know what trouble looks like. I don't know if there's going to be action against the directors. I don't know if they're going to be hit with a fine. I don't know what that looks like. I think from that point on, I think the protocol is sufficiently decentralized. I think now XRP probably isn't a security. I think it may have been when they released it, but now it's not a security. And now probably it's not as centralized as it was in the past.
I think that's a valid argument and possible. I just don't see why you choose XRP out of everything in the world you could put your money into. Like, I personally prefer to avoid dumpster fires with my cash, but I guess to each their own.
I mean, it doesn't look good for them. I took these tweets from Bitstamp.
Where are you even going to sell? Where are you even going to sell it?
Well, if you're not American, there are probably places to sell it. And that's, it's actually funny enough. One of the big defenses that these diehard XRP fans who seem to be emotionally connected to their trade now or their investment. And you taught me that that's one of the biggest mistakes that you can make, is to emotionally attach yourself to an investment or to a trade. And these guys seem to be emotionally attached. And one of the arguments they're making is they're saying, well, it's only the US people that can't buy it and sell it. But what about the rest of the world? What about Japan? What about China? The way I see it, XRP is a protocol that's designed to move money from places where there's lots of money, i.e. the US, and to move from the US dollar to other currencies, such as the Philippine currency or the Indian Naira or whatever else. And they want to facilitate this with XRP. Now, if you can't buy and sell XRP in the US, surely that makes a huge dent in the plans of in Ripple's plans of what they're going to be doing with the XRP token.
There is no positive way to spin what's happening. It's just every positive thing I've seen, quote unquote, is an irrational reaction and a refusal to accept new information, right? I mean, you and I talked about this last time too, right? People criticized Michael Saylor for hating Bitcoin in 2013. Well, you know what? He's a smart person. His opinion changed and he acted on it. If you've been an XRP fundamentalist and hardcore, eventually at this point, there should be enough information that even though it's embarrassing and you have to be humbled, you say, I was wrong. I'm going to go put my money in something better.
Eat your humble pie and move on to something better and take profits. Speaking of that, I still have a few mistresses from 2017 that I'm struggling to break up with. One of them is Tezos, XTZ. I mean, I keep wanting to sell it and put the money into things like EGLD or one of the other guys, and it's the one thing that I haven't. Yeah, so I think I'm going to move on to that. Let's look at the next story today. We've got Grayscale announcing they've got $19 billion under management. And of course, Nuriel came up and he said, this is, of course, false marketing, because all that happened was that they had $16 billion a while ago, and their holdings increased because of the thing. So I looked at the numbers, and there is a little bit of truth in that. And in fact, for the first time in a long time, Grayscale actually sold about 130 Bitcoin yesterday. Very small number, but I guess that's for the redemptions. Do you think that that's a signal that maybe the demand is dried up and maybe Bitcoin is going to go for a slight consolidation? Or is it just a case of people on their vacation, on Christmas holiday, on New Year's holiday, and kind of going, look, we're not actually pressing the button on buying Bitcoin now?
I mean, it's hard to speculate as to why, but if you look across Wall Street and not Grayscale in particular, and certainly not Bitcoin in particular, I mean, traders, institutions, hedge funds, they start to close their books at the end of the year. There's nothing unusual about seeing selling a few days before the new year. If there's a tax write-off that's needed, if there's implications, the tax year ends in 3 days. So I think it's hard to judge any action by them or anyone else at this time, because there's so many variables and reasons that they could be doing what they're doing. But I mean, listen, I think I would love to see Bitcoin chill, consolidate, hang out, drop a little bit, just kind of range, give altcoins a chance. We've seen where parabolas end, right? A parabolic move usually ends up at a 75-80% retrace. I'd rather see a 30% retracement now, or retest of, the previous 20K highs, something like that, to, as support and go up from there.
That's one school of thought. Another school of thought says if we carry on going up in a parabola, then maybe the new support level will become 20,000, and maybe the new support level will become 25,000, and maybe the new support level will become 30,000. And if that happens, then that's actually a positive thing.
Sure.
Your call, and I know you look at the charts. I don't know if you've got a chart in front of you, but your call around the Bitcoin price based on charts, sentiment, buying, etc. Is it starting to?
I can pull up a chart. Sure. One second. I have a couple of charts.
While you are pulling up your charts, guys, I do see you guys all in the comments. I see everybody. I see the Zebeduk. I see Spencer H. I see Perfect Stable, Sharpie Genius. I see Monty calling for ADA. I see Hangdo calling for Cardano. We have got Charles Hoskinson on later on today. I see you all here. If you are here, hit the like button, hit the subscribe button while Scott's calling up the charts. And let's see what he's saying about the Bitcoin price. I bet you're also calling.
Yeah. So I don't know if it shared my window or my screen, but you let me know if you can see it.
We can see it.
Okay. Well, this is a monthly chart, right? So I think the most important thing looking at the monthly chart is to understand that we are in uncharted territory, and anything that you glean from a chart is complete. I mean, charts are always conjecture and a guess, but now it becomes really just throwing a dart territory. There is nothing bearish about this. I mean, we have 3 of the largest monthly candles in history the last 3 months, each one that closed at a key resistance. This blue line, 13,863, was the previous highest monthly close ever, right? November stopped, October stopped exactly there. November launched off of it into the all-time high, stopped exactly there as resistance, consolidated below it. You see these wicks below each of these. Same price action to every key level on the monthly. And now we're in price discovery. So, the most important thing to understand is that when you're looking at a chart like this is that unless you're using Fibonacci extensions or you're an Elliott wave maximalist or something like that, it's very hard to predict what's going to happen. So any target or guess is completely just that, a guess. I would just say that, listen, I would love to see at some point, like next month or something, a move back down to this and then to continue on, because I think that something as key as the previous all-time high should be retested. I have a more zoomed in chart here. This was my last trade that I was presenting to people. Was we were ranging here, and I said, listen, you might want to short it if it goes below here for that test of 20, this line, and long it above here. It broke, retested, and launched from 24K. It's been retested, but it doesn't really matter how you draw it. We have obvious bullish consolidation here at some point. So the next trade would be a break of this line and movement up. It's pennant, flag, descending wedge, doesn't matter. One way or another, it'll form a pattern and should, if it breaks, at least go to the recent highs.
All right. So when you draw that line, we've got some listeners who are listening to this and are not viewing it. Where is that line? What are you looking for it to break through for you to say, okay, there's another breakout on Bitcoin? Now we've had these breakout after breakout after breakout. Where is the next breakout? What's the level?
It depends. There is no level on a descending line, because you can continue down, $2,000 more with the line descending and then break it. So it's impossible to say that. That's why you just sort of put an alert on the line.
As it is today, though, I mean, as we are right now, where you were drawing on the chart, what is that line level more or less?
It's at current price if it would break, but it's 27,000 formed sort of the second touch on that line. So I would say at this point a break would be in the mid 2600s. If we went sideways from here, we could break it. I'm sorry I unshared it, but I can try again. But yeah, I would say that we're just kind of consolidating here. It's chilling. It's the end of the year. We're between Christmas and New Year's. There's really no reason to be aggressively trading anything at this moment. I mean, it's the weirdest week of the year for markets.
Yeah, it looks like 2021 is also gearing up to be an amazing year. I mean, we've got such amazing news coming out of crypto. I heard via the grapevine, not sure if it's public yet and not even sure if it's real, that eToro, who is, primarily in the game, they're talking about an IPO, they're talking about a NASDAQ listing, they're talking about a $5 billion market cap. This was a company that raised money on a $1 billion market cap less than 2 years ago. At the same time, we had Barry Silbert with this tweet. I love this tweet. He turned around and said, Grayscale's AUM on the 1st of November was 7.6 billion. Today, the AUM is 19 billion. Now, obviously, some of that is just an increase in prices. And to help us look at what the increase in price may have done, I pulled up this chart, and it seems like the majority of what they're holding, 16.3 billion out of 19 billion, is obviously in Bitcoin. 2 billion is in Ethereum, or 2.1 billion is in Ethereum, and 11 million is in XRP. What do you make of that?
That XRP is going to be moved. And I think that Ethereum number is going to grow tremendously over the next 6 months to year. If what they're saying is true, they've come out pretty clearly and said that, they're getting a lot of calls about Ethereum, even more interest in Ethereum than Bitcoin. So I think that a lot of it will move in that direction. But I think it's just, there's no better signal for demand, and it's demand from normal people, right? It's not like Bitcoin maximalists aren't buying GBTC and ETH, you know what I mean? So this is real, like actual normal people who want to have exposure in their stock portfolio, and institutions who want to, do arbitrage, and it's an opportunity.
So there's two things that I want to say there. I think that a lot of the crypto holders in the space actually hold a lot of their holdings in the GBTC instead of holding Bitcoin. Now, there are a few reasons why they would be doing this. IRA, of course, the taxes, which is great. The second reason is it's not very expensive to store, to pay 2% per year to store and insure your assets and have them managed for you is not the biggest number in the world. And especially if you're talking about, such monstrous returns on assets like Bitcoin. But the biggest reason why people in the crypto space actually hold Grayscale assets is because of the arbitrage. Because if you're an accredited investor, you can buy at net asset value from Grayscale. You then, under the US laws, you then hold or only get your investment after 6 months, and then you can dump it back on the man on the street or the unaccredited investor and make huge premiums. When you look at the premiums, the Bitcoin premium, I haven't checked in the last couple of days, but can go between 20 and even 100%. The ETH premium is much higher, and the Litecoin premium is
hundreds
in the X's.
Hundreds of percentages. Yeah, hundreds of percents. If you're an accredited investor, but they're not taking investment right now. They closed that, I believe, last week. But I know people who, invested in the Litecoin Trust who are accredited. And basically, if you hold a year, it would have to go down 90% for you to lose your money.
Why do you think that arb still exists? How can that be? Is it just the arb between accredited investors and people ahead of the curve dumping on unaccredited millennials, baby boomers, whoever it is? I don't know who the unaccredited investors are, but is it just accredited investors arbitraging an SEC regulation that is supposed to protect, of all people, the unaccredited investors, that's now costing these guys millions, billions?
Accreditation laws, in theory, are supposed to protect people from making bad investments and losing all their money, right? But in reality, what they do is they allow rich people disproportionate access to opportunity, and that poor people or middle class people even are not given access to. So this is just another example of, because you have money, you basically are given free money. So, and yes, I think at the end of the day, they end up dumping on your average man. I don't know if it's big enough to, move the market on Litecoin or Ethereum, for example, but it's free money if you're accredited. You could, as of 3 weeks ago, you could buy Litecoin for effectively 1/10 of the price by investing in the trust. And as long as you hold a year, so even if it goes down 50%, you would make like 5 times your money.
Yeah, but the only catch is that you've got to be accredited. Any idea why they're not taking any more investments now? I know that a lot of people have written to us and said they've actually attached the same generic standard mail from Grayscale saying we're in a lockout period or a closeout period, and therefore we're not taking any investments. Any idea why they wouldn't be taking any more investments?
I don't know. Maybe they're closing out the year again and, gonna see where everything shakes out. Maybe they got a little too big for their britches. I don't know. I have no good answers for that. I think probably operational, and they just need to slow down and make sure that they have, they're growing so fast, right? At a certain point, any company, whether it's assets under management or you're selling Beanie Babies on the internet, at some point you run into some scaling problems if you grow too fast, I would imagine. So they're probably just pumping the brakes a little bit into the end of the year to make sure that, they've got their stuff together for 2021. That's my guess.
I have reached out to Michael Sonnenschein. Hopefully we'll get him on the show tomorrow. If we don't get him on the show tomorrow, we'll try to get him on early in the new year. There have been suspicions that the reason why they're doing this is because the Digital Currency Group, which is the owner of the Grayscale Trust, may be aiming for a listing or may be pricing itself for a listing. And they may have some auditing work or legal work to do, which needs to happen. Two other little tidbits that I picked up, one which I really liked, and that is a tweet by Mike Bacella, who we do have on our show tomorrow. He's the Chief Investment Officer from Block Tower Capital. And he says, in a sign of the times, the head of investor relations for Facebook is now leaving to run investor relationships for Coinbase. This guy is either a genius or a masochist. What do you think, genius or masochist?
Probably a genius masochist. I think you can be a bit of both, right? You can see an opportunity, but also know that it's going to be a lot of friction and pain, probably, to make that fortune. So I don't know. I mean, I wouldn't want to work at Coinbase right now, but that's just my personal preference. I wouldn't want to work at Facebook either.
Why? I mean, you wouldn't want to work because I don't think you want to work for anyone because you got a love for music and a love for your life.
I don't want to work for anyone. That's definitely true. But I think that I think we all know why you wouldn't want to work at Facebook necessarily, right? I mean, yeah, sure. And Coinbase has a similar vibe. It's sort of the Death Star, in the crypto space. They're the empire, the one that's viewed to be sort of working with the government, somewhat, centralized, big business. I don't necessarily feel that way about the company. I just wouldn't want to work there. And then there's obviously the controversy around the environment actually working there after Brian Armstrong's statement, basically my way or take your severance and hit the road. It just doesn't seem like the kind of place that I would personally want to be. But maybe if I'm going from Facebook, it's a better move.
Because the station's called Banter, I'm going to challenge you on a few things. I want to say to you, the first thing I want to challenge you on is I think it's better that Coinbase and others are working with governments because I think in the beginning of this movement, we can be, all libertarian and anti-government and whatever else. But ultimately, if we want money to come in here, if we don't work with the governments, we're not getting money in here. And the only reason why we're actually getting all this money in here from people like MicroStrategy and Grayscale and everyone that's buying into the Grayscale Trust is because people like Coinbase and Coinbase Custody are working with governments. And I think that's the future of the industry. I also want to take you on one more point, and that's saying I don't think that I've met a successful business person that hasn't had this cloud over their head. You look at Steve Jobs, you look at Mark Zuckerberg, you look at all these guys. They all have, Brian Armstrong, I think, is no different. I think these are geniuses, but I think somewhere they have to lack, you can't have everything.
No, I agree with that. And they're, unfortunately, they're in the spotlight and they're probably vilified unfairly for a lot of things. But this was a question of whether that guy is a masochist or what I would do. And, I'm just saying personally, not for me. But I do agree with you that, we need clarity. We need regulation. We need big companies that we know are not going to pull a Ripple, so to speak, right? I don't think, Ripple is the antithesis of Coinbase in this scenario, right? They were behaving badly and they're bad for the industry. So we need someone on the other side that's good for the industry, that's doing things the right way.
I want to take you back. Let's go back to the Ripple discussion. If you look at the XRP price crashed. And yes, I agree the XRP price should have crashed. But if you look at XLM and if you look at Link, both of those guys crashed in sympathy. XLM, because the founder is Jed McCaleb, and Jed McCaleb was also the founder. He actually wrote the XRP protocol, if I understand correctly. And Link, because people thought that the SEC may go for Link next. Now, the difference to me is that XRP is controlled by Ripple, and Ripple is a very centralized entity. Ripple has shareholders. Ripple was selling XRP to fund the operations which were benefiting the shareholders. XLM or Stellar has a foundation. And in fact, the foundation is so good that they once even burnt a whole lot of tokens because they kind of said, look, we don't need these tokens. We don't need so many tokens. And so they burnt or destroyed a whole lot of tokens. What do you think about taking your money out of XRP and putting your money into XLM or putting your money into Link, who kind of went down for no real reason?
It's the old argument, throwing out the baby with the bathwater, right? And that's what we saw in March. You see some of the best companies in the world. When the stock market dumps, those company stocks go down, and that's what I was talking about earlier. That's your Warren Buffett buy irrational fear opportunity. So maybe there is an opportunity with that with XLM, but XLM is somewhat similar. A case against XRP could affect XLM. I don't really see how Link is similar. It's an Oracle. I think it's a completely different product, and I don't think it's to the benefit of shareholders, as you said. So I think Link is completely separate. Also, Link's not a company operating in the United States. It's like you said. I mean, this is Ripple that's the problem. And it was to the benefit of their shareholders and against the people that they were falsely advertising tokens positively to. I think it's a different case. I mean, if you think that XRP is going to go down and anything similar will go down with it, I don't see why you'd put your money into something exactly similar that could potentially go down. But I don't think Link qualifies, in my opinion.
Yeah. All right, Scott, the last time we spoke to you, you kind of said to us that you were taking a break. You didn't see any real trades. Now ETH is broke. You said you were holding ETH. Now ETH is broken through 700. I think it's firmly above 700. I haven't looked in the last 5 or 10 minutes.
718.40.
718.40. So you're watching the graphs. I'm watching the camera here. Is it Altseason?
No, I don't think so. I don't think so. I mean, listen, I think I don't think Altseason will be what Altseason was in the past. I think that we're 3 years past people arguing over what Altseason means. I think there are great opportunities in the alt market. I just don't think that Bitcoin has settled down enough for that to be the case. I mean, Ethereum is still only half its all-time high, right? And yeah, it broke up, but it could just be a reactionary bounce from a really aggressive bottom as well. I don't think so. I like the Ethereum chart. I love Ethereum, like you said, but I'm not passionately throwing, 50% of my portfolio into random altcoins right now. If it was Altseason, I mean, you literally just start throwing darts and you remember, and you just make money willy-nilly. That's not happening right now.
It kind of depends where your darts are, I think, more or less. If you were buying tokens, are you buying tokens at the moment? Are you trading anything? Has anything caught your eye?
No. I mean, honestly, I think the last I can't even remember, but the last big altcoin trade I took, which I'm still in, was Sushi, which I told you guys last time. I'm just kind of sitting in that. I'm always buying Bitcoin and Ethereum sort of as an investor, but and there's some smaller cap things, investing in pre-sales, things like that. But largely, I mean, I'm kind of sitting on the sidelines and just waiting to see what happens. There's ideal times to trade and there's times to wait and see. And for me, this is just sort of a wait and see moment. I mean, that's my feeling on it. I don't know.
So today I asked a question on my Twitter. Today I asked a question on my Twitter, and I said, if you were holding one coin for 2021, it's not Bitcoin, and you have to hold it for the whole year, and you have to put your money into that coin today, what would that coin be?
Ethereum, without even hesitation, because I think it just should catch up. At the very least, it should catch up.
And what about
you said all of my money? So if it's all of my money, I'm not going to take something riskier because I think it might 100x. I think Ethereum is safer, and I think it will rise in the next year. If I'm putting all my money in it, that's.
What about the opportunity of something like DOT, where it is much cheaper at the moment in terms of a market cap? It seems like it's building a huge momentum. From a technological point of view, I mean, DOT is incredible. If you look at the projects that are building on it, the DOT ecosystem reminds me very much of the Ethereum ecosystem earlier on in its life cycle. Isn't that?
DOT is awesome. Yeah, I think DOT is awesome. And Polka Starter is one of my biggest investments, and that's built on DOT. I think anything in the DOT ecosystem has a tremendous chance of doing well. In fact, I think a lot of the other things that are built in the DOT ecosystem will outperform DOT, much like many of these DeFi tokens outperform Ethereum, sort of similar. But I saw ADA on there. ADA is a great coin, but I have no interest in throwing outside of Ethereum and throwing things into projects that have just guys who have been holding for 4 or 5 years, just miserable at how much money they've lost. That's not the kind of project that I'm approaching. You had eGold up there. That's another one in my top, 6 or 7 holdings. If you said you can't do Bitcoin or Ethereum, eGold would probably be my choice for where to put my money next year.
All right, that's exactly what I'm doing. I'm finally going to muster up the courage to sell my Tezos, and what I'm going to do, my XTZ, and I'm actually going to go and put all that money into eGold. And I've been contemplating doing it for a while. I keep saying Tezos is going to recover, but nothing ever comes out of Tezos.
If you have your doubts, just have Benjamin Minshew, the CEO of Elrond, on your show. Yeah, and the guy's so smart. It's kind of like I want to buy Tesla because I believe Elon Musk is smart. I want to buy eGold because I believe Benjamin is that kind of person.
100%. All right, Scott, do you ever look at the small caps? Do you ever look at like the tiny micro caps, the ones that are like under $5 million and under $10 million? Are any of those ever on your radar?
Yeah, but I'll be completely honest, as I always am on Twitter and with my newsletter and stuff. I buy them because I'm offered opportunities to buy them at pre-sale. I'm not really particularly interested in trading them. For whatever reason, my Twitter account got to a size where people contact me and say, "Hey, man, do you want to invest in this thing that has a 500K market cap?" And I generally, if it's interesting, I say yes. I make sure it's not going to rug pull and that I know who the people are. That's how I got into Polka Starter, which I told you is something that I love. I was in on the pre-sale, and I think there's a lot of projects like that. You just have to be very careful and knowledgeable about which ones you choose if you're investing in the public sales, because a lot of them, you have to understand that depending on the structure of those pre-sales, and people don't know this, and it's unfortunate, and I try to tell them, depending on the structure of the pre-sale, they may release 50, 75, 80, 100% of those tokens to people who invested in the pre-sale on the same day that your public listing. And those people largely, I don't, but those people largely are going to sell, right? So it's like even though it's a low cap, all this supply comes onto the market and you see these public sales happen. The coin goes up 25, 30% and then down 80%, So to me, I think if you're interested in these, wait a week, wait a week, see where it shakes out. If it's a project you're interested in, then consider the investment. But, getting caught in the FOMO of like, I got to buy the public sale right now, it could go very well, but there's also that likelihood that you're going to get dumped on very hard.
Much higher risk and obviously much higher return. Scott, it's been a great pleasure having you. We'll probably only see you again in the new year unless something amazing happens. So thank you for an amazing trading year with you, 2020. And we look forward to, of course, having you back here in 2021.
Well, thank you so much. It's really always a pleasure.
Great. Thanks very much. And for those of you who are watching, we're going to move on to the next segment of the show in just a few minutes. It's called Small Cap Hunting. We'll be back in a minute or so with our small cap choice of the week. Welcome back to CryptoBanter.com, and we're coming to you, bringing you a brand new segment in our show, which is called Small Cap Hunting. And that's, of course, a segment for those of you who are looking to find those small cap gems under $5 million, under $10 million, and maybe even under $1 million. But what we're doing on Small Cap Hunting is we're looking for those small cap gems with powerful teams, amazing use cases, and an amazing product. And we're going to bring the founders, sometimes they're going to be anonymous and sometimes not, onto the show to find out exactly what they're talking about. Also, later on today in our show, don't forget, we've got ELLIOTRADES, and he's also a small cap hunter. He's going to be talking to us about his picks for 2021. So if you are watching this, our small cap hunter token for today is a token called a Unimix. And if you are watching this and you are a Unimix supporter, hit the like button, hit the subscribe button now, because this is a part where the YouTube algorithm spreads the content. And if you want YouTube to spread the content about Unimix, then this is the time for you to hit this like button and hit the subscribe button. Now, as I mentioned to you, we have my friend Elio from ELLIOTRADES. And, he mentioned, or he made a tweet, and I love this tweet. I think this tweet encompasses everything that we stand for as a station, and as specifically looking for the small caps. And that is that ETH can make you rich, but the gems can make you ETH. And of course, the gem that we've got today on our show, as I mentioned to you, is none other than a token or a protocol called Unimix.finance. For those of you who don't know what Unimix is, well, Unimix is effectively BitMix, but for tokens that only trade on Uniswap. And with me on the line, I've got Crypto Yielder, one of the anonymous. He's one of the anonymous developers of the Unimix protocol. Crypto Yielder, are you there?
Yeah, hello. Can you hear me?
Yeah, we're getting an echo. I don't know if you can turn down the volume slightly.
One second. Let me just grab a. 1 second. I'm just all out. Hold on.
All right. While he's sorting out his problem, guys, hit the like button, hit the subscribe button. Let's see if we can get the numbers up. Let's see if we can get a lot of people watching and listening to our small cap segment right here on the show. Crypto Yielder, you there? Crypto Yielder, are you there?
Is it better now?
Much better. All righty. So,
hello.
Yeah, so for those of you who don't know, Unimix is a protocol which Crypto Yielder is going to be talking to us about. Effectively, what it is, it's a margin lending platform that allows you to trade on margin on assets that are listed on the Uniswap protocol. The development team is an anonymous development team, and Crypto Yielder is one of the developers, and they've decided to remain anonymous. But welcome to the show. Tell us a little bit about Unimix and what Unimix is about.
All right. Well, I'm pleased to be on the show. Well, Unimix is really just. Perhaps I should just give some context. Uniswap emerged as a project, which the intention was that there'd be small arbitrage opportunities on Uniswap versus centralized exchanges, and those small arbitrages would permit the prices on Uniswap to be stabilized. Now, recently we've seen that Uniswap has actually emerged as a primary exchange at some points in summer. Volume exceeding Coinbase's. So then we've realized that actually it would actually make sense for an entire leverage trading ecosystem to be built directly on top of Uniswap, and that was where the idea of Unimix came into fruition.
All right, so let's take a step back and look at the bigger market for something like this. So I think the first part of this is to say that up until Uniswap, the centralized exchanges had all the power. They decided which tokens would list. They decided when they would list. They decided what pairs would list on their centralized exchanges. Now, what that did for the market was it created a lot of politics, but B, very high listing fees. And sometimes I heard that if projects wanted to be listed on something like a Binance or others, and I'm not going to mention them all by name, but they would have had to pay very, very, very high listing fees. Then along comes Uniswap, and Uniswap is this master of decentralized exchanges. And effectively what that means is that it's just a piece of software or just a protocol which allows for peer-to-peer trading, which means that effectively traders can trade amongst each other, keeping tokens in their own wallet and not subjecting themselves to having their tokens left on this centralized exchange. And Uniswap came into the market, and I'll remind some of our viewers that just before Uniswap came onto the market, because it was an open source protocol, there was a fork created of it, which was called SushiSwap, and SushiSwap incentivized users to move their funds out of Uniswap and put them onto Sushi, and that's exactly what happened. They called it a vampire attack because it sucked all the liquidity out of Uniswap and onto SushiSwap, but then of course all the liquidity went back once the mining rewards went back. And now we've got a situation where we've got a peer-to-peer exchange where pretty much almost anyone can list an Ethereum compatible token or an ERC20 token, and they can trade it amongst their peers without depositing it into a centralized exchange. And as a result of that, what we have is we have a whole lot of small projects that are now able to list tokens and to raise financing and to play the token game without getting approved by the exchanges. And so we're going to spend a lot of time on these tokens. These are what we call the small caps. These are, when we talk about small cap hunting, we're looking for tokens in the $1 million, $2 million, $5 million, $10 million market cap, maybe even up to $20 million market cap. But these are the ones that are listed on Uniswap or available for our guests or for our market to trade. And there's a lot of trade on Uniswap. In fact, today, Uniswap do more volume than Coinbase. And I think some of the other exchanges as well. So there's a lot going on. And I think that the future of trading actually doesn't lie with the centralized exchanges. I think the centralized exchanges will become much more like banks. The future of trading for me, and certainly for a whole lot of other people in this, is decentralized exchanges. And like we said, the king or the biggest decentralized exchange at the moment is, of course, Uniswap. Now, what you guys have done at Unimex is you've given traders who want leverage the opportunity to do this using the protocol, right?
Right, directly. That's pretty much it, yeah.
Okay, tell me a little bit about how this came about, who the team is, and where we are in the project.
All right, so in DeFi summer really showed the potential. This recent summer showed the potential of DeFi as a whole. It showed how liquid the market is actually, and so the idea of building levered protocols I've always been present, but it's just that the issues of liquidity just made certain things just not worth it or just not viable really. With billions of liquidity now, it really has shown the potential of the DeFi, and I feel like, leverage trading was something that was missing with Uniswap. A market so liquid really does need a decent leverage trading mechanism, and that's what Unimex had to happen. Really, we just felt like we had to push it quickly, just to be first to deploy it to the market, really, and that's really how Unimex came about. And I worked 7 devs from originally from London that met at university, but we actually prefer to stay anonymous just because of the sort of grey area in the regulation. With the BitMEX CEOs being indicted, it's a bit of a problem. So we prefer to stay anonymous.
Look,
I hope that's not.
You've touched on 2 things or a few things that I want to dig deeper in again for our guests that are watching this. I think first of all, let's talk about why these kind of platforms like BitMEX, what is the importance of these type of platforms in a market structure? Why do we need these margin trading, leveraged margin trading providers in the market? What's the purpose of them?
Fundamentally, it exposes smaller users to larger profit-making opportunities. A 10%, 10-20% move on a player that's easily able to throw away $1 million is great, but a smaller player that maybe is only able to throw away 10, 20,000. For him to really be exposed to these moves, he needs greater liquidity, and these sorts of lending mechanisms allow smaller traders to profit greatly from this market. That's one. It also just encourages greater liquidity in DeFi in general, which helps grow the space. And I think it's fun, to be fair. It's also fun, and I don't think there's anything wrong with just a bit of fun in the space.
Yeah, look, it's definitely fun until you get the BitMEX liquidation, which a lot of our guests, our listeners, our viewers have been involved in. BitMEX, the price used to go down, and the systems used to crash, and we used to get the BitMEX liquidations. But I think these leverage trading exchanges, or the allowance of leverage trading, is an important part of the market structure. It's something that you need for price discovery. It's something that you need to create leverage products, derivatives, et cetera, and that is something that allows for a market to mature. And if we're going to get crypto maturing, BitMEX, as much as I probably wasn't the biggest fan of the business, I was really a fan of what they were doing to the market, because they allowed for fast price discovery. I don't know if you remember, but whenever the price used to move, the price used to move first on BitMEX, because that's where the people were the most exposed with leverage. Now, I want to talk a little bit about how the Unimex protocol actually works. So I've called up a version on my screen. I believe what I'm looking at here is the beta version, right?
Sure.
Okay, now explain to me as a user, what can I do on this protocol?
All right. Do you think it'd help if I just don't want to alienate users, but if I could just briefly explain the smart contract structure, do you think it'd be helpful?
Please go for it.
All right. So just so people can understand what happens here, DYDX, for example, is probably the premier leverage trading protocol on Ethereum. So DYDX clears trades through 0x's relaying system. So just to give some context, Ether Delta in around 2017 developed the off-chain exchange approach, the hybrid exchange, where orders are stored in a database, distributed, and then settled on-chain. That's like a semi-centralized model. Now, Uniswap really perfected the solely on-chain exchange, the automated market maker. So our orders are directly cleared on-chain. So what happens with Unimex is that we have a pool. We lend a stake in a pool, borrowers from the Unimex platform borrow from that pool, and then trades are opened and closed directly on Uniswap. I've tried not to go into too much detail, but I think that was fairly clear. So does that kind of explain
That was definitely fairly clear. I want to just ask you a few questions to make sure that I've got an understanding of it. If I want to be a liquidity provider to somebody who wants to take a leverage trade, so I don't want to take a leverage trade myself, you want to take a leverage trade, can I provide liquidity to that person?
No, it's as a liquidity provider. Okay, so each asset on the Unimex platform, so ETH or DAI or whatever, right? All that liquidity is aggregated in a pool. You simply just have a stake in that pool, and then the fees are right. And then the fees are fees from lending and then distributed proportionally.
So what you do is you become a staker, which effectively allows you to fall into this pool, which means that you're actually a liquidity provider. Then on the other side, you've got let's call them degens, people who want to take long DeFi leveraged positions. I know I'm still not sure if degens is a negative term or a positive term. I think some people like to be called degens, but let's say that you've got these degens who want to take 100x or 10x leverage trades on ETH, on Bitcoin, and maybe even on WBTC and maybe even on some other assets that are trading on Uniswap. Tell me what happens then.
All right, so you've got a pool. Several lenders have staked ETH or whatever on the pool or a token. Now you want to take out a leverage trade. So what happens is you select your leverage. A percentage of the position size will be committed to facilitate closing positions and liquidations. But you have your pool multiplied by the leverage. You then, once all these sorts of checks for your collateral pass, the contract then permits you to take a loan, to retrieve a loan from that lending pool. That then opens a trade on the Unimex platform. You can then close it and etc. At the point at which you close it, you then refund your original loan to the lending pool. Does that make sense?
That makes perfect sense. So you come in, you put in your collateral that allows you to trade. You make your trade. When you finish making your trade, you return your commitments to the people who lent you the money. Now, if I look at the screenshot that I've got up here, you've got 1x, 2x, 3x, 4x, 5x, and custom leverage. Now, are you allowing people to go 100x leverage or 200x leverage?
Right. So at the point, we're really at the start of this, and no one has really done something like we're not really sure how viable this is. Is it possible for 20x leverage on Uniswap? We don't know. So we're just sort of taking it slowly for now. We're trying to be conservative with the leverage. If everything works out, we'll be increasing our offer. But we're just at a point where we're really trying to test out what's possible.
The tokens that you're allowing me to trade on leverage, is it any token that's listed on Uniswap, or how do you decide what token I can actually go and trade these leverage trades on? Okay,
right. So it's very important for a Uniswap pool to be liquid, or else our protocol just won't work. So for now, we're restricting the tokens on offer, at least for the mainnet version, to highly liquid pools on Uniswap, with ideally about 10 million ETH in dollars. Pooled, ideally. That should suffice.
You're looking for liquidity. Obviously, that's just a parameter that's set in the smart contracts, and over time, you can remove those parameters. What's the reason why you're looking for liquidity? Is it because you don't want people to get wrecked?
I mean, it just wouldn't be possible. So a person could borrow, could borrow a huge amount from the pool at the maximum leverage, and then let's say the pool is just illiquid. The Uniswap pool is liquid, they wouldn't be able to close the position. Lenders wouldn't be able, it just wouldn't be possible. Wouldn't be able to close it. Because by closing it, sorry to interrupt, but by closing a position, just to reiterate, the smart contracts then sells, let's say, the assets that you've borrowed back to Uniswap to retrieve the original loan. So if the pool is illiquid, then you wouldn't be able to complete that sale.
Yeah, okay. Now, I know that the development team is elected to remain anonymous, and I think that there's a big cloud over anonymous development teams. Now, I want to just clarify a few reasons why a development team may choose to remain anonymous. I think the first reason that a development team may choose to remain anonymous is what you've cited, and that is because there's lack of regulatory clarity. And so the developers don't actually want to expose themselves and say, hey, we're doing this project In some jurisdictions, it may be legal, it may not be legal. It's a gray area, and we don't want to put our name out in the public, because then we're going to let the legislators go after us. Is my analysis here right?
Yeah, sure. And also, what happened to the BitMEX lead team recently, with Arthur Hayes hiding in Hong Kong, and I think one person is indicted in the United States. It's a bit. I mean, it's just becoming a bit scary, to be honest. I think it's best to stay anonymous.
I mean, do you think that you may be transgressing any laws writing a protocol like this? Is there anything here specifically that worries you?
The main issue is that we have American users, and can't really restrict American users. So I'm not sure how the American financial authorities would respond to a project like Unimex. That's really the main concern.
And so first of all, how do you know you have American users? And second of all, can you not just prohibit or restrict the use of the platform to say, until there is regulatory clarity in the US, we're not accepting American users?
Sure, we can on the UI, but not on the contract. So then would there be a problem then that we deploy the contract that where we couldn't really restrict American users access to? So that's really the main concern.
And do you think that, if you had an entry screen that said, we prohibit, and if you're American, please don't enter the site, do you think that that's not going to be enough in the eyes of the law?
Definitely not. But we'll probably do that, but it probably won't be enough. I've been in cryptocurrency for a while, and there were casinos in 2014, 15 on Bitcoin that had those sort of warnings, and the American users, but they still faced prosecution in the United States. So I'm not sure that would suffice or would even be recognized.
All right, now without revealing the identities of the developers, and I do understand why you are remaining anonymous. As you can probably understand, as I'm reading here in the chat, the guys are saying, look, if we don't know who the developers are, what if they're just taking our money, if they're doing a rug pull, if we never see our money again, et cetera, et cetera. The developers that are building this project, you mentioned that you guys all met at university or at college. Tell me a little bit about the team without revealing their names, but what are their qualifications? Tell me a little bit more about that.
Right, so we have the development team, software engineers, and the marketing lead, Fantal, has a business degree. But regarding rug pulls, right, that's a very important point. Our liquidity is locked on a project, Unicrypt. If you go on Dex Tools and type in UMEX, there'll be a Unicrypt logo. You click on it, and you can find that every month we relock our tokens. That prevents a rug. We don't own those Uniswap LP tokens, which can be burnt to retrieve the funds pooled on Uniswap. So to kind of like combat the uncertainty, which is a direct consequence of our anonymity, we're trying to be as transparent as possible. So everything is open. We've exposed our dev addresses. We lock liquidity. There shouldn't be any concerns regarding rug pulls, as you mentioned.
All right, let's talk about the roadmap. How are you guys tracking on the roadmap? When can we expect to see some kind of working product? I know the product that I showed on the screen was a beta product, was a testing product. When do you think we'll actually be able to go on this, take leverage, and start trading?
Honestly, I'm perhaps the main member of the team that's slowing the project down, because I just want to be very careful. I don't want people to get wrecked. There's been so many rugs and hacks. I just want to be very careful. However, optimistically, without over-promising, by the end of this week.
So by the end of this week, you guys are going to launch. You guys are going to launch a decentralized exchange that allows for leverage trading on Uniswap assets. What would be the assets that we would be able to trade on this on Unimex?
I can definitely say WBTC, wrapped Bitcoin, the stable coins, so USDC and USDT, DAI.
Okay,
and probably Wi-Fi as well, and maybe perhaps Link.
All right, and how quickly will you be adding other assets onto it? I mean, I know you mentioned that you're the main member of the team that's slowing things down. How quickly till you add other assets onto it?
I think we have to be careful, and also, to be honest, we can only add big projects with guaranteed big pools. We can't add small projects unless small projects are willing to lock liquidity on Uniswap for at least a year. So it won't be that fast, really, to be honest.
Look, of course, I understand that, and I understand, of course, that you're building a new product in a market that's very small, and over time, as the Uniswap assets grow, and as the liquidity grows on all of these Uniswap assets, that of course you guys will allow people to trade. And I mean, that's the market cycle. That's effectively how these things grow. Last question: funding. How much funding have you guys raised? What's in the pipeline when it comes to funding?
Well, I won't say the exact amount, but it was an aggregate, just like around a million-ish.
Around $1 million, and today the project has a market cap of about $5 million. On CoinGecko, it's got a market cap of $5.6 million. I'm looking at my screen. Yeah, I guess we'll have to keep looking at that. So you guys say that at the end of this week we'll probably see a live product. If anybody wants to get more information, where's the best place to get more information?
The Telegram. Just go on the website unimex.finance, click the Telegram link. And to be fair, if you have 12,000 tokens, you can message the admins, and they'll allow you on a better version of the platform, where you can test it out. So you'll be fine. Yeah,
a lot of people are asking here, what's the use case of the token? What is the use case of a token? I'm just looking at the comments here in the chat.
Excellent question. All right, so I can't believe I forgot it. Sorry. All right, so Unimex charges fees upon the opening and closing of positions. So half of the fees go to lenders. Now the other half of the fees, some are reserved in case of delayed liquidations, etc., or development. But a solid portion of the majority of this other half of these fees are distributed directly to Unimex stakers. There'll be a staking contract where you stake your Unimex tokens and just passively receive funds from a leverage trading platform. So imagine BitMEX gave you fees and there was a token that entitled you to those fees, and that's what Unimex is really.
Alrighty, Mr. Crypto, thank you for coming on Crypto Banter. We are out of time. We have to move on to our next segment. I guess if you guys do like the small cap segment, you can go and check out unimex.finance, and you can find out more about that. We're going to be moving on to the next segment of the show, and the next segment of the show is one that I've been super excited about. Just after the break, we're going to have Charles Hoskinson on with us, and today we're going to try to talk to him about a lot of things that are not only Cardano. We're going to try to talk to him about a lot of things. We'll be back just after the break. Welcome back to CryptoBanter.com, and this is a segment of the show that I've really been looking forward to for a long time. This is a segment of the show where I bring my friend Charles Hoskinson on. He's the founder of Cardano and a friend, and he's going to be talking to us about his trends or what his expectations are for Crypto 2021. I also have a lot of questions for him. He came out quite vocally in when the Ripple XRP SEC case happened. So much to talk about. Charles, welcome back to Crypto Banter.
Hey, Ran, it's a pleasure to be here, and Happy New Year.
Happy New Year to you too, my friend. Charles, you came out, you were one of the first guys to come out when XRP, or when the SEC took on XRP. You're one of the first guys to come out vocally and make a point. What are your thoughts, now that the dust has settled? What are your thoughts about, what the SEC did, and then, of course, how XRP or how Ripple has responded?
Well, I made 3 videos about it. I made the first video right when I heard that they said it's a security. And I said, oh, wow, that's weird. And then I read the Wells notice, and you're still there, right?
I'm right here. Yes, I'm here.
Oh, okay. I'm sorry. I lost you on the screen. Just making sure I was talking to the audience. So anyway, I read the Wells notice response from XRP. And then finally, I read the SEC summary. So what happens in a securities enforcement case is if the SEC goes after you, they don't just go after you. They talk to you first, almost always. And there's usually a pre-enforcement negotiation where both parties kind of talk around. There's discovery of documents and these types of things. And at the very end of it, if they actually want to make it formal, they send you what's called a Wells notice. And basically that's it's saying, hey, we think you're a security, convince us you're not. You reply to it. And about 4 out of 5 times, they reject the reply and then file a lawsuit and go after you. So usually there's a latency there, 2 to 4 weeks, if not longer. So when I saw the Wells notice, I said, okay, well, they're not going to file a lawsuit until January. And then like literally the day after they dropped the lawsuit in the Southern District of Manhattan. So I read that, what they said was 71 pages long. It was a lot of reading. And it really surprised me that they didn't make it what's called a 10b-5 case. And that's what's called, that's securities fraud. Because basically, if you read through it, what really pissed the Securities Exchange Commission off was that Brad and Chris sold $600 million worth of XRP over a long period of time and gave it to themselves. And it was like one of those things like, well, the only way we can make this a crime, or the only way we can make this a civil issue, is by saying XRP is a security. So we got to do that to go after the principles. But everything there, breaking the corporate veil, requesting a jury trial, it's very clear that this is a personal case. This is not a procedural thing where you kind of screwed up on paperwork and that they're trying to prove a point. This is a situation where it was clear they were trying a negotiation, and it's clear there's bad blood in both organizations. Statute of limitations don't apply. They entered a tolling agreement in 2019, and the SEC is taking a position that XRP's always been a security since 2012 on. So it's definitely a bellwether case. Now, what I said in the 3 videos is that at this juncture, XRP is probably not a security because it meets that sufficiently decentralized viewpoint the SEC has. But I also said I understand why the SEC is doing what it is doing, because they just don't like it when founders of projects just dump hundreds of millions of dollars of their token in a slightly not so transparent way while going on TV and saying prospects look good, you should buy. And they point out in numerous cases of what they feel is market manipulation. What's unfortunate is that this is an example of an ununified response in the U.S. Treasury Department. So you have some branches like FinCEN, for example, say, oh, we're okay, it's a currency, we'll just regulate them, they'll apply for money transmitter license and so forth. And then the other thing is that what they really should have done is gone over to the CFTC and said, well, we don't have a Ripple problem, we have a Chris and Brad problem. Let's go ahead and say it's a commodity and then charge them with market manipulation like they did Mark Rich or any of these other guys, and just gone after the principles of the company, but not hurt the retail investors of XRP. Since they've taken this action, Coinbase is delisting, OKCoin is delisting, Bitstamp is delisting, and I think the market has collapsed more than 60%. This is a predictable event, and actually the former commissioner of the SEC, Joseph Grunfest, who's heavily involved in our space now, wrote a letter to the current commissioner of the SEC and said, you shouldn't do this because all you're really going to do is hurt the retail investors and damage an already existing product. So it's a difficult situation, and what's frustrating is there's no resolution. It's going to go on for a long time, 24 months. They might lose the initial, then it'll go to appeals in the Second Circuit and work its way through. It could go all the way up to Supreme Court, redefine the Howey test. But it's a backtracking on prior statements that the SEC made about sufficient decentralization, and it's just not good for the industry as a whole. And what's really sad is a lot of these other coins, like Vitalik and others, they say, oh, XRP is a shit coin, hallelujah, this is great. At the end of the day, you're just hurting retail investors. Whether you like Chris and Brad, you're hurting these guys.
I'm going to take the contrarian view here. I'm not for U.S. regulatory bodies. I think that the U.S. is over-regulated, and I think that they're over-enforced, and I think that the whole approach specifically may cripple the U.S. and destroy their leadership in technology. So I'm not a big fan of what they did. And of course, I want to support all my friends in crypto and say, if the SEC goes after any crypto company, we all have to go rah, rah, rah and fight against them. The problem is that I have a fundamental issue here. I don't believe in centralized companies that have shareholders that also have tokens and then have the majority of the tokens and sell the tokens to fund the activities of the centralized company and then pay dividends to shareholders at one point from the proceeds of effectively dumping tokens.
Exactly. And that is what pissed off the SEC. And rightfully so. They said, look, you guys have Andreessen Horowitz as an equity investor. You could easily Silicon Valley raise hundreds of millions of dollars to capitalize your company. you instead sold XRP to capitalize the company, which in itself is not necessarily a bad deal, especially if you're spending it to grow the ecosystem. But they didn't do that. They did distributions to the principals of the
distributions to the principals. The principals, well, the market makers propped up the price. They hyped up the price. The principals dumped their own tokens, which is fine. Like they say, Jeff Bezos is allowed to sell his stock if he wants to. I just don't think that you can compare a token which is issued without any rights and sold to the unsuspecting investor to fund the operations of a company, a centralized company. Look, without wasting too much more time here, I think what you're saying is that the outcome that you expect here is very similar to what I'm saying, where I expect that the SEC will probably say, look, right now it's not a security. It's decentralized. We're beyond it.
No, but they didn't say that. They took an unprecedented step where they said XRP in its current form today is a security. With EOS or any of these other regulatory actions, they had an escape valve. So they said, well, you sold this ERC20 token on Ethereum. We're going to go after that. We're going to fine you for that, but we're not going to make any statement on EOS as of today. Or Tezos is another example of that, where there was something that happened, let's settle, and then we're done. But Tezos of today is a different thing entirely. What the SEC is saying here is Ripple was and still is a security today, which is why Coinbase, for example, is delisting it. They wouldn't do that if it wasn't a security.
Everybody. Charles, do you see any case for actually buying XRP now? And I'm not asking you to speculate on price. I mean, I want to stay away from those kind of...
No, and I've never seen a case for it because they've had so many opportunities to dominate and really innovate, and they passed on it. For example, the consensus system is closed. It's an invitation-only club. There's no smart contract functionality. They had a project called Codius. They could have owned all of DeFi. They came up with that before Ethereum was around. And that could have easily been in. There were a lot of people who tried to use XRP for token issuance in DeFi, and it was discouraged in that ecosystem. So you have all these XRP people that are just absolutely convinced it's the best technology in the world and that XRP is going to eat all the banks, but it does nothing for central banks. It's not a central bank settlement system. It hasn't really replaced SWIFT. There's no real use and utility in the system, and it doesn't do much for me in the DeFi space. Despite the fact that they've known how to do it, people like Stephen Thomas and others came up with great ways to add functionality to the system. And also, I can't participate. If I buy XRP, there's nothing I can really do with the consensus system. You buy ADA, you buy EOS, you buy Tezos, you buy F2, you can participate in the consensus system. You can participate, in the case of Tezos and Cardano, the governance of the system. You can't as an XRP holder. So I don't feel that that's a good or solid ecosystem. The other thing is there was no reason for the Ripple company to be in charge of the distribution of the token. If you have a smart contract platform, you could have the blockchain itself emit the money. But that wasn't the case. Instead, they just played judge, jury, and executioner and decided, well, we're going to give some here below market rate and some here below this, and then we'll sell some here and so forth. It's like, guys, this is you're doing cryptocurrency wrong. Now, every time I say this, the XRP army brutally attacks me. So they like me because I said it wasn't a security, but tomorrow they're going to hate me because I'm being critical of it. But, what's amazing to me, I just tell people, think for yourself. You need to be decentralized. With Cardano, we have 1,200 stake pool operators. They run the network. With Ethereum, they have thousands of people participating in mining. Same for Bitcoin. Okay, it's a decentralized network. You don't have to ask permission from anybody to use it. There's no central entity that encourages or discourages types of business. If somebody, for example, today wants to run Wikipedia 2.0 on Cardano, they don't call anybody. They just go and start building, and they do that. Whereas Ripple was always in this weird hybrid land of you kind of have a gatekeeper, you kind of don't have a gatekeeper, and we're going to say there's no gatekeeper because, well, we don't want to be a security. Meanwhile, price is great. You should buy. Oh, and by the way, we're always selling. And then we're giving the proceeds to ourselves. It's just extremely distasteful. And it's why XRP has been loathed by many people in the space. That said, there are hundreds of thousands, if not millions, of holders of Ripple, and they deserve better. And they shouldn't be hurt because of the actions of some of the founders. And I know why the SEC is doing it. Standard playbook. They want to provoke a class action lawsuit against the Ripple company for right of rescission, because if it's security, you can ask for your money back. So they're trying to bleed out the markets to a point that law firms start doing a class action. It's a very standard playbook, and it's going to be quite damaging next year to them.
Charles, I love having you on the show, not only because I think you have an amazing way of taking very complicated things and making them very simple, but also because every time you come on the show, the chat goes absolutely crazy. We've got pseudo crypto. Thanks, Charles. ADA is such a gift. You have this unbelievable community that follow you around. Guys, if you are watching this and you want this interview to go out to more people, hit the like button, hit the subscribe button, because that's how YouTube decides who they distribute the content to and how much they distribute the content to. People here are comparing Charles to ADA, the smart guy. He's like Steve Jobs. I think I kind of agree with him from my interactions with you. Charles, this is a show where I don't really want to talk about Cardano. We had a show about Cardano 2 weeks ago. It was amazing. It's one of our most viewed shows. We've had over 40,000 views on the various mediums. Really one of the best shows that we've had. But I want to talk to you more about the crypto space. And I want to start off with a very basic thing and saying to you, when Bitcoin started as a peer-to-peer electronic cash system. We now know that it's not exactly cash, or it's not exactly cash in its current form. And we created this narrative that Bitcoin was a store of value, a digital gold. And it seems that now Bitcoin is going way beyond this narrative of a digital gold, because people are realizing that it's programmable, that it's digital, etc. Let's try and understand, where are we in the market cycle of Bitcoin? Where does this thing go? What does Bitcoin become? When you look at it now, and you followed it right from the beginning, I think in the beginning you probably thought it was a money or a store of value. Where do you see Bitcoin going now?
Well, Bitcoin is like the socially acceptable way of getting involved in the cryptocurrency space. And you often see this when you see the evolution of technology. So in the beginning, Bitcoin was like the radical thing. And if you were a Bitcoin guy, it's like, wow, you're out there, you're a crypto anarchist and so forth. Now, Bitcoin is like the old, safe, ossified thing where we know it doesn't change very much. The regulators understand it. And it's very easy for people to buy and participate in Bitcoin. And it's easy to tax it. It's easy to understand it. You can de-anonymize it in ways that law enforcement is comfortable with. So it's no coincidence that we've seen a litany of institutional investors now entering into Bitcoin. Now, Bitcoin serves kind of two roles in our ecosystem. One is it's a ubiquitous store of value. So it's kind of the rising tides or falling tides. None of the alts go anywhere unless Bitcoin goes somewhere. And if Bitcoin goes down, they go down. If Bitcoin goes up, they go up. So that's one dimension of it. The other dimension is it's the gateway drug into our ecosystem. The minute you hold Bitcoin, then you can wrap it and send it to other networks. You can go and trade it on alt exchanges and get into many other things. And also, it creates curiosity. So once you're in it, you're like, well, what's better, what's next, and so forth. So it's going to maintain, in my view, that role for at least the next 3 to 5 years. Now, the problem Bitcoin has is it has no governance system. So as a consequence, it's super difficult to upgrade Bitcoin to make it competitive against what the third generation cryptocurrencies are bringing to the table. So when we start talking about how do we build a new financial system for the world and get 1 billion people in and do DeFi and be really useful and do peer-to-peer lending and peer-to-peer insurance and stable coins, Bitcoin doesn't have anything to offer there. It's just a way of leaving the legacy system and entering the crypto system as an entry point. So it's a good gateway, but you can't really use that platform effectively to host stuff at the moment. Now,
but
it's no
Charles,
coincidence. Go ahead.
Sorry, so Charles, I think I agree with you on that argument for more advanced users and people who are actually interested in crypto as an asset class. But if I look at the new types of buyers, and I'm going to use Michael Saylor as the kind of buyer, and there's many like him, or they are becoming more and more like him. I don't know if they really want to get into crypto. I'm not sure that they have any interest in smart contracts as they currently stand. I'm not sure. I think they just want to hedge against the US zero interest rates and printing of US dollars. And I think that they're saying, look, this is gold.
There's too much money in the world. There's too much money now. We've printed too much money. And so imagine if you're like the CEO of the Sovereign Wealth Fund of Norway. You got $1.5 trillion, and then the country tells you can't invest in oil or carbon anymore. And they say it has to be like this type of investment or this type of, or let's say you're doing a sovereign wealth fund for an Islamic country. You can only invest in, investments that are approved by Islamic finance. So when you have too much money and you can't deploy your capital everywhere, you still are expected to get 6 to 9% return every year. So you see this asset class that just consistently goes up over a 10-year period, and it goes down, but it always goes back up. So as an asset manager, you say, if I can lawfully invest in that collection of assets, that's fine. And then once you're in, you start building sophistication around that, because you have a fiduciary responsibility as a fund manager to build sophistication around your investment portfolio. So you say, okay, where's the macro trends of that industry going to go in the next 3 to 5 years? So there are two. One is a push towards a movement of value from proof of work coins to proof of stake coins. And the second is a push towards real use and utility. So instead of just being a store of value where we can park money, these things are actually starting to serve real utility, especially in the developing world. So if you're a fund manager, you're saying, well, I have to put money in here. Do I just keep it in one asset, or do I do what I always do with my fund, which is build a portfolio? But then when you build a portfolio, you say, well, what goes in that portfolio? So then you have to understand the macro, you have to understand the dynamics of the industry, and you have to also have ratings and indexes. So you have Bitwise and you have Weiss and these things. And over the last 3 years in particular, we've really seen an organic growth in all of those things. So it doesn't matter if Bill, the fund manager, gives a shit about the principles in this ecosystem. He has a very real problem. Is he has too much money. He's expected to have a return. The set of things he can invest in are shrinking or becoming duds. I mean, like how much money you're making on bond yields or treasury bills or these things anymore. They're just pointless. You're talking about negative interest rates. So you have to deploy capital somewhere else. And then you have this new asset class that keeps growing, and it seems to be getting institutional acceptance. Your neighbors are investing in it. And your investors are saying, how come I don't get returns like that? Your LPs are pushing you. So you're willing to pull the trigger and push in there. And then that requires you to build sophistication over time in that industry.
Charles, I think if we look back at 2020 was a bad year and a great year on many accounts. I think for crypto holders, it probably didn't start off like the best year in the world, but it's finishing off on a real high. Not only because I think we've made such big strides in positioning Bitcoin as a store of value and bringing Bitcoin to the world, and thereby bringing, of course, the whole asset class to the world, but also because it seems like we've launched DeFi. It seems like DeFi is really a thing now. Let's look forward. You're nodding your head. I'm keen to understand why you're nodding your head.
I don't think DeFi is a thing at all. I mean, right now it's a thing, and it's a thing in that we're starting to talk about it, learn how to build these protocols, but it has no users. DeFi is not about a kid living in his mom's basement in New York trading one cryptocurrency for another, yield farming. The whole point of DeFi is that there are billions of people who live in economies where they do not have banking services. They do not have access to the global economy. And DeFi is a low-cost way of getting them into a global economy. That hasn't happened yet. You know, it's just like Bitcoin in 2013. It went up to $1,000 at the end of the year, but Bitcoin had no real use or utility at that point. It was still a small asset class. You know, people were just starting to take it seriously. And a lot of well-intended people, especially VCs, said, this thing is going to get big one day. But it would be crazy to have called Bitcoin big in 2013. Now it's big because it has real utility. It's a safe place to park value, and it's basically another version of gold. As an asset manager, you can kind of wrap your head around that, understand that, and it's reached that prominence. It's not going away. Governments are even taking positions in it. But DeFi is like 2013. It's going to take another 5 years to 10 years to see real growth and adoption and use and utility come in. And when that happens, you're going to have hundreds of millions, if not billions of users. And these applications will move trillions of dollars of wealth every single year. The problem is none of the existing DeFi applications are proven to be able to scale, to be secure, or actually have the right teams behind them quite yet. Just like 2013, we didn't have an altcoin that really made a lot of sense. I mean, we had variants of Bitcoin, but who cares? And then Ethereum came out, and it was the first time ever people said, hey, there's something here that's unique and different from what we've seen before. Well, similarly, DeFi has to have its Ethereum moment. It hasn't had that moment yet. It's more like the fertile Cambrian expansion, where we have all these different things, and we have unrealistic valuations. You have crazy things like anonymous teams behind them and other things. I saw all of that back in 2011, 2012 with the altcoin surge. It makes no sense. You need professionalization, you need regulatory clarity, and you need scale to emerge. And that's not going to happen for a while. It's going to take a few years to work its way through.
All right, so let's look at what we can expect in 2020, which is, again, I think the main reason why I wanted to speak to you here. We've got 3 days left of the trading year in in 2020. Let's look at 2021. If we speak again at the end of 2021, or if we look at the themes that you think will develop, where are you putting your chips in 2021?
Well, that's really interesting. So first off, the United States still has profound influence over the markets in general. I mean, look what they did to Ripple just from one regulatory act. So the first question is, what will happen in the Georgia Senate race? So if that goes Republican, it's very unlikely that Biden is going to be able to get a lot of his appointees in quickly. So that means the interim SEC chair and the Treasury people are going to stick around. And they're actually kind of pro-crypto, these new people that are there. So there's a nice 6-month window, if not longer, where policy can be made that potentially could be very beneficial to the industry. The other thing is that we're going to be hit by a COVID tsunami of, we keep printing money to prop everything up. At some point, you have to pay the bill. So we're going to see an economic collapse, if not a depression, then certainly
in 2021. In 2021.
I think so, yeah, because everything we have in the economy is just like we kept printing money and kept injecting. You can't do that. So at some point, they're going to say, hey, we're not going to print anymore. There's no more stimulus. We can't afford this, or else we're going to debase the currency. And then you live the consequences of a year of lockdowns. You can't go to New York and get rid of half of the restaurants and destroy the entire service industry and say, oh, that has no economic consequence. I'm sorry, it's going to be devastating. So, and there's this demand for a welfare net, and that will continue to deplete the government and so forth. So it's not going to be good. It's going to be blood in the streets. And so you're going to see the economy kind of go down. You're going to see this regulatory uncertainty that exists for a while. And usually there, you have a fleeing to safe assets, which, for example, earlier this year when COVID first came out, everybody started selling like crazy. They even sold Novavax, for God's sakes. They sold everything, went to cash because it's a cash is safe. They even sold Bitcoin, and Bitcoin collapsed and the markets collapsed. So the question is, will crypto be the safe harbor asset in 2021 and people actually buy instead of sell it if they see economic downturn? We don't know. Now, if it is, we could see $50,000, $100,000 Bitcoin just from capital inflows as a safe harbor. And then there's rising tides for the entire industry. If it's not, then the price we have right now is probably a peak, and we could see a depreciation fairly quickly. So that's on the US side. And then there's also the European side. There's also what is China going to do? And they're innovating, but in a very Chinese way. It's very closed, very insular, very top-down control. So for example, the PPOC is building a stable coin, okay. And that does create synergies where other nations want to create stable coins. We've noticed a big uptick in central banks contacting us saying, hey, we're thinking about a stable coin. What can you say about it? And usually when we talk to them, they say, hey, we saw what China's doing. It's really interesting. What can we do there? So there's going to be a lot of synergies that occur there as a consequence of what China does. But I don't think China anymore controls the crypto markets because they got too aggressive with cracking down. So it wasn't like it was in 2015 or 2016 where China could actually lead the market or crush the market.
They crashed innovation back then. I think they crashed innovation back then. I think they clamped down on it too soon. And, there was a big flourishing community in China and they were doing exceptionally well. I think I get the picture that you're painting around the macro environment. Specifically, where I want to get into the portion of Charles's brain where he tells me what he's looking at in the crypto market, like what's going to be built, what can we expect to see? I think we had oracles, we had derivatives, we had margin. What are we like? If we look at 2021, what are we going to see built? What are we going to see emerging as the new crypto themes? And I think specifically why I'm looking at that is I want the listeners and the viewers of our show to be able to go and look at potentially investing in certain themes. I'm not going to put you on the spot for specific tokens yet, but I really kind of want to understand the themes that you'd invest in, given your thesis for this big environment.
So there's some certain technology trends. One of the advantages that we have in our company is we're both a research group and we're also an engineering company that builds cryptocurrencies and products and services. So on the research side, we kind of can see the future. We kind of say, okay, well, we know where the world's going in 5 years based on paper volume. So the big thing that I've noticed, certain research trends are things like recursive snarks and just overall evolution and improvement of SNARK technology. And why this is relevant is it solves one of the biggest problems. It's a partial solution to one of the biggest problems of the cryptocurrency space, which is what happens when the blockchain just gets too big. Well, we want growth and adoption and use and utility, and we go from gigabytes to terabytes to petabytes. But what happens when that occurs? Who gets to actually bootstrap the system? And how do you make sure that you can use the system on a cell phone or a laptop? So recursive SNARK gives you full node security, but you have a cell phone-like user experience. It's very fast, very quick, regardless of the size of the blockchain. So we've seen a great research agenda. We saw Halo, Halo 2, and now Dan Boneh and his colleagues at Stanford wrote a paper called Halo Infinite. And that's a bellwether that technology is leaving the lab and it's going to work its way into more sophisticated cryptocurrencies. And that's going to help a lot on the scalability side. So there's a lot of people chasing that. You pick your favorite SNARK vendor, from the Coda project to Zcash and so forth. And we actually do research ourselves in that because it's just such a fascinating topic. But I think that's one major thing that has always been percolating in the lab, but it's starting to work its way, and we may see commercialization of that in 2021.
That's a great one to follow.
Yeah. So second is, the proof of stake stuff is just starting to get really good. I mean, back in the day, it was like, does it work or does it not work? That's where we were at in 2015. And there was a very strong adherents who said it does not work. It's perpetual motion. Proof of stake is a scam. And they wrote all these papers. Usually they come from Blockstream, these types of guys. And they had some valid criticisms and critiques. And there were certainly a lot of issues, long-range attacks, grinding attacks, issues with the clock, being able to bootstrap from Genesis, recovery from 51% attacks. These were not easy problems to solve. Whereas proof of work had a very elegant, simple way of solving it, a bit extremely expensive. To synthetically do that without the price is require a lot of research. Well, what we've seen is this Cambrian explosion of papers. So we have Nakamoto proof of stake out of the University of Illinois, Algorand out of MIT, Snow White out of Cornell, obviously our Ouroboros research agenda. So what's happened is the science and foundations have become solidified and validated in the peer review setting. So now it's gotten to a point where you're starting to see economists from Harvard and Stanford write papers on the economics of proof of stake and what works and what doesn't work. You're starting to see a lot of refinement of proof of stake. So the realization of that refinement in 2021 is going to become a big thing. And the key driver there is probably Ethereum. They're the 800-pound gorilla, so they have the biggest say in it. And it's going to actually create lots of open questions about, is a plutocratic system sustainable, or do you need to somehow introduce a meritocratic element to it? The regulatory side has a lot to be figured out. The tax side has a lot to be figured out, and so forth. But I believe that's going to be the single biggest value transfer in the space next year, where you're going to have a lot of proof of work money go into the proof of stake space, and people are going to take portfolios of it.
I'm not even going to bring in the discussion of the Bitcoin maximalists, but I think I do agree with you. I think we have made some strides in proof of stake. I think a lot of the proof of stake strides are still on paper. They're still in the research format. And I think that that is going to go into 2021. One more trend that you're looking at in 2021, and then I'm going to play a game that I promised our viewers and our listeners that we're going to play with you. But one more trend that you see in the crypto space for 2021. I know you didn't mention snarks. I know you didn't mention proof of stake. One more.
Yeah, so there's also a discussion about decentralized storage. And this has been something we as an industry have been flirting with for a very long time. I remember the MaidSafe days, the Storage days, and so forth. It's been long, and now we have IPFS and these other things. But that's another example of a very real problem, that data has to become an economic agent. It's too expensive to perpetually store things forever on a blockchain. And it makes no sense to perpetually store everything forever on a blockchain. So the question is, what do you keep forever? What do you pay rent? That's a very uncomfortable conversation because you're kind of diverging from Satoshi's vision, but it's a necessary garbage collection feature of a network. And if you don't do it, you're going to see gargantuan blockchains that are just simply too expensive to store, which is the problem is exacerbated that these are replicated systems. So you have a concept of a full node, and every single full node has to have the same data. So you have K full nodes and data, it's K times N. That's just crazy. So we want to move to a distributed system where everybody has a different chunk, kind of like BitTorrent, right? Everybody has a different piece of it. Somehow you can reconstruct whatever you want, but no one actor actually has the entire system. There's been a lot of discussion about this. You have projects like Chia. You have things like proof of space-time, you have proof of simple work and permacoin, all these types of projects or ideas that were in the academic world, but now we're actually starting to see people take this idea very seriously, especially in smart contract platforms like Ethereum. And we do as well at Cardano, but we didn't have time to put that in the original 5-year agenda. So we're going to try to sneak that into the 2025 Cardano agenda. And other projects are also looking at this that are sensible. And it's not an easy question at all because you lose availability. And so you go from a guarantee that all data is always there all the time to probabilistic guarantee. Second, if it's an economic agent, you will eventually lose some of your history. It'll get pruned out of the chain. But it's absolutely necessary when you're talking about billion users and high growth. And whoever solves that problem first, I think, has a huge leg up in the smart contract industry.
Yes, I think the blockchain has created a problem of where you actually store data. I know that Arweave, which is a protocol that we are looking at, or we do look at, is talking about that, or is doing making some strides. You've obviously got IPFS, you've got Filecoin, which is, I don't know if they're ready for that kind of storage, but definitely something to talk about. Charles, in the interest of time, we've got, we're moving on to our next segment, which is all about small caps data. But I promised our chat people and our listeners and our viewers that I'd ask you a question. I'd put you on the spot and I'd say to you, if you were to buy 5 tokens, but none of them are allowed to be Cardano, because we know that your heart and soul and everything else is in ADA. And I'm not actually even looking at price here. I'm just looking to see the types of projects that would excite you if you were an investor in the space, if you are an investor in the space, outside of the Bitcoins and the Ethereums. Where would you put your money?
I only hold 3 tokens, Ergo, Bitcoin, and Cardano. I just generally don't buy tokens in other projects. People give me tokens, like, I have some Poly because I was a consultant there, for example. And, that's fun, but I don't generally look at these things as investments. I'm here because I have a mission. My goal is to build up enough infrastructure so that we can actually go and give economic identity to billions of people. So whether Ethereum gets there first or Cardano gets there first, I'd like for Cardano because obviously I think it's better technology and I hate Solidity development, but I'd like the infrastructure to mature and evolve to that point. And then let's go and get that done. I don't really look at crypto as an attractive speculative investment, principally because the markets are thin, they're controlled and highly manipulated. And you can't win when that occurs. Also, macro events have huge, huge impact. And things happen that are outside your realm of control. So why would I put money into an industry or market where 90% of the value appreciation or depreciation has nothing to do with the fundamentals of the underlying asset, and it has everything to do with things that are outside my scope of control? Like, imagine this. Imagine if you were in Syria, you run absolutely the best restaurant ever in Damascus, and then all of a sudden the war breaks out. No matter how good your management is, how much profit you're making, because of a macro event, you're wiped out. And that's what crypto effectively has done for a long time. And it's deeply frustrating. And people keep saying, oh, we don't need regulation. But I do see the same agency failures occur again and again. Exchanges doing very counterproductive things, stable coins without a full fiat backing, all these things. And it just makes me sick.
I have an idea. Let's remove the token price. Let's remove the trading. Let's remove the token price. I want to try and get a feel for the man that is Charles Hoskinson, the genius. When he looks at this space, who does he look at and say, wow, you guys are actually building something really interesting? I'm not sure if it's going to work.
I'll answer that question. That's a fair question. And there's a lot of projects that I admire. In some cases, the admiration is one way. It's not reciprocated. I really do admire the ambition Vitalik has for F2. I think he's crazy to boil the ocean and do as much as he's trying to do, but they have made reasonable progress, and I applaud when you try to do crazy things. I admire a lot Tezos. I think their governance push has been a really cool thing. I think there's huge issues with certain parts of the project, but nonetheless, I really admire the ambition, and I admire what they've been able to accomplish and how they keep pushing forward. I also admire their work in formal verification. Matic Labs and the other guys, they've done great work with Mickelson and the verification of smart contracts. I admire what Grigori Roshu is doing with runtime verification and what he's been able to achieve with the KEVM, Yella, and Firefly. And he started a whole conversation about formal verifications of Ethereum smart contracts. And it's extended to Algorand now and to Tezos and to other projects above and beyond the work that we do with him. So I also admire Ergo a lot. I love Sigma protocols, and I think Alex Cherpinoy is one of the few people to actually tackle or try to tackle some long-lasting problems we have, like UTXO meltdown, for example, so that you reduce UTXO bloat. Also, non-outsourceable puzzles for proof of work, so you get rid of mining pools. Super hard. They exist for a reason, to mitigate variance. So, I really admire a lot of those projects, and I admire a lot of the privacy coins as well, because privacy is a fundamental human right, and it's kind of crazy to try to tackle that because you're trying to do everything, the whole vertical. And if you slip up on any part of the vertical, you lose privacy. So you might have perfect SNARK system, but your network stack is not designed properly. You leak information, and you can de-anonymize people. So I admire those types of things. The problem is there's no way to price that, because that's contingent on factors that are just beyond the control of those projects, and they have a lot to do with luck and chance, or macro regulatory events. Like if there was a pro-U.S. Treasury Secretary, very pro-crypto, we will see $250,000 Bitcoin for that reason alone. If there's a very anti-crypto Treasury Secretary, we will see $5,000 Bitcoin. All these projects can execute fabulously and build all this amazing technology, and that's just the reality that the industry lives in. So I take a very pessimistic view in that respect.
Charles, we are out of time. I think I could carry on talking to you for hours and hours and hours, but that just gives me an excuse to get you back in 2021. So first of all, thank you for all the amazing contributions that you make to the industry, that you've made to me as an individual, that you've made to our station. Whenever you come on our station, we go crazy, our views go crazy, and you bring more people to us. Have a great remainder of 2020, and we'll catch up again in 2021.
Sure. This has been a lot of fun, Ran. I always love coming on. Sorry to rain on your parade from time to time.
No, what I'm going to do is the next time that we meet, I'm actually going to give us an extra half an hour, because I think that's pretty much what we need. We keep going over time, and we keep talking, and I keep having to cut you off and shorten your answers. But the reality is that I'm so involved in your answers that, but I'm also managing the clock. So Charles, Happy New Year, happy holidays. Thank you so much, and we'll catch up with you again in the new year. We're going to move on to the next segment of our show, and that is all about small cap hunting. And I've got a big surprise for our viewers. We're going to keep watching. Charles, thank you very, very much.
Cheers. Thank you so much.
Alrighty, welcome back to CryptoBanter.com. And if you've just joined us, welcome. And if you have just joined us, of course, hit the like button, hit the subscribe button, so we can get this content out to the rest of the world and the rest of the crypto world and broaden the horizon. And effectively, like Ivan on Tech says, pump your bags. Now, speaking of pumping our bags, a lot of market commentators say that we've just entered an Altseason. Ethereum breaking through $700 means that we probably may have just entered an Altseason. But it seems that this Altseason is not going to be the same as the other Altseason. We can't see the big tokens running. And if you look at tokens like EOS and you look at tokens like Tezos, those guys ain't going to run. Which means that we have to be asking the question, where are we going to get our returns from this Altseason? And one of my friends in the industry says that the returns are coming out of what we call the small cap gems. So what I decided to do was to bring ELLIOTRADES onto our show right here on Crypto Banter. He does make his own shows, I think, every single day. He focuses on the big trends and the small trends. But the one thing that is really absolutely the best in the world at is, I think, the small cap gem mining. So I've got ELLIOTRADES with me right here on our show. Elliot, welcome to Crypto Banter.
Yeah, thanks for having me, Ran.
Our display is calling you Charles, so I'm going to just change that, and now we've got you as ELLIOTRADES.
I'll take it.
Welcome to Crypto Banter, man. I must say I'm a big fan of your station. I keep watching, and as soon as I got off my show last night, the first thing I did was check what you posted, and you just posted about the cover protocol hack. And I guess that must have been quite tricky for you, because you have called it previously on your show as one of the tokens that you actually like.
Mm-hmm. Yeah, I think for me, I made it clear when I cover that the reason why I liked it was the space, right? It's not about, when you're looking at an emerging trend like insurance, which objectively is pretty new, it's not about saying this protocol is going to win. when you think about insurance from a conceptual standpoint, you understand that the insurance is there to provide a safety net in the event that pretty much, the unthinkable happens, exploits, hacks, bugs, some kind of failure of the system. And when you're thinking about the tens of billions that are coming into DeFi, it's not possible to get those big dollar signs in. And when you're thinking about the hundreds of billions, the trillions of dollars in traditional finance, there needs to be a safety net. Now, a safety net cannot be comprised of a single protocol because in and of itself, that protocol has vulnerabilities. So, the point I made on my video yesterday is that the stinging irony about the cover hack is that it proves the space. It proves the need for this industry, right? And so you're saying that this niche that Cover is a part of, the decentralized insurance, though Cover obviously suffered an exploit, I do think that they have a plan to sort of fork and reissue and all that stuff. We've seen, tokens kind of bounce back with that plan. The more important thing is that there needs to be multiple insurance providers. And I've said this from the beginning, which is why I didn't bet on just a single coin when I did my initial coverage of insurance. I bet on the entire space. I bought every single insurance coin, and I'll continue to do that because there are going to be some huge, huge winners, I believe, in that space. And they're going to need to cross-insure each other. And that's one of the biggest things, is that they cannot just be insured in a vacuum. They need to cross-insure each other. And therefore, any one winner will need to rely on external insurance protocols. In my opinion, I believe that that's going to be the future of the decentralized insurance niche. And so, ironically, the Cover hack proves the need for Cover and every other decentralized insurance product.
And that's definitely a theme that you keep looking at. So for some of our viewers and our listeners around the world who don't know who you are and don't know what you do, I've given a small introduction about who you are. I watch your YouTube channels a lot. You make a whole lot of them. A lot of them focus on very early stage projects. And I take it that that's a sign of your investment approach. I also pulled up this tweet, which I absolutely loved. The tweet says, ETH can make you rich, but gems can make you ETH. And that, I think, really summarizes your investment philosophy. Tell us a little bit about how you invest, what your outlook is, and how to make money in the space, and how you place your chips.
Yeah, thanks for that, Ren. I do have a lot of fun on Twitter. And, the thing about the space is it evolves. And I was kind of like everybody else back in 2017, 2018. I wanted to believe that there was these disruptor protocols, and I still do to a degree, believe that there are these disruptor protocols that are going to come and they're just going to eat everything in its way. Ripple's going to eat the banks, and, what is it? EOS is going to take over and decentralize whatever the protocol that you fell in love with. That protocol was supposed to just keep going and growing and have sort of like a Facebook effect. And the reality is that all these things are possible. But what I started to realize in 2020 is that the bigger, older protocols tend to sort of just wait for these big macro movements in the market. And it sort of felt like you were playing the waiting game by waiting on these protocols. And you're kind of, in my opinion, just hoping, right? You're hoping. And it kind of takes away the value of your research. So say you're someone who likes to research a lot, and you like to know everything about a project. If you're doing all that good work, and then in the end, you're just crossing your fingers and waiting, then to me, it's like, why did you do the research? Where is the fruit of your labor? And so when you actually go a little bit further down the market caps and you find the newer projects, ones that people don't know about, and you're able to separate the good from the bad, what you do is you're able to usually find things before they have their sort of coming out party. And if you're able to do that, then even if things retrace a bit, if you find something at under a 5 million market cap, under a 1 million market cap, and it has a nice little explosive sort of initial FOMO moment, a FOMO moment, if you will, that can lead to a nice pop in the price. And even if it rescinds back a little bit, usually if you get there pretty early, or if you're there before the big party, you'll still be sitting on some gains, right? And so, and that can happen pretty quickly, right? Because there's enough liquidity in the market to always move these small caps up and down pretty hard. And so you don't need a huge motion from Bitcoin to the tune of 100 to 200% gains, then a sort of, stalling out of Bitcoin, then money moves into the big caps. You don't need to have these things that only happen once every couple of years, once every 6 months or 12 months. You don't have to wait on that. That can happen every week. That can happen every day. And so your good work of finding these coins can be rewarded with portfolio changes in a very short amount of time. And now, of course, I preach this all the time. It's a lot more risky. You need to do a lot more preparation. You need to be really, really focused on these coins, because if you find something and it goes up 7x or 5x, and it's a tiny cap coin very early in its life cycle, chances are it probably won't stay there. So I preach to people to de-risk their positions in that event, right? You take out your initials, you maybe distribute a little bit of profits into ETH, whatever your goals are. And that way, the rest of it becomes a lot smoother, a lot less risky.
Let's take one step back. And is that to say that you don't have any of your portfolio in, I'm not going to call them big bets, because I'm assuming that you are invested in some big chains, but does that mean that you don't have investments in things like Bitcoin, ETH, DOT, Cardano, the big ones, the big trends, the chains that are over $1 billion or even $500 million?
So, I've been in this industry a while. I'm a professional in this industry. And so I've collected coins across a lot of chains. And of course, I have huge holdings of Ethereum and Bitcoin, which I talk about regularly. But, a lot of people come into the space, and my sort of belief and the reason why I came into the space, and most of the people I know, is because they've heard about these sort of, supernatural profits, the sort of rapid acceleration of wealth. And these types of things are very attractive. And then the tech becomes kind of like the explanation, right? They want to explain why this is going to happen in a logical way. But that's not what brought them in, right? You don't come in because you're like, wow, did you know that computers can process data in a decentralized way? I'm going to put all my money in. No, it starts with the financial, and then it moves to the technical. And a lot of people really want to grow their portfolios, essentially. And so if you want to grow something a little faster and have a little bit more of an active approach, to me, it's really hard to do that if you're just sitting around and waiting on Altseason. So the way I do things is my new money goes into the small caps. Once those small caps have their moments, have motion, I'll distribute profits into the long-term holds. So say I really love Polkadot, right? Say I think Polkadot's just the one, and I do really like Polkadot, right? If I get say I have a new fresh $1,000 I want to put into the market. Well, I don't put it directly into Polkadot. I find a gem, I find a small cap. I try to wait for it to have a sufficient movement. Then I'll take some profits from that and I'll stick it in ETH. I'll stick it in Polkadot. I'll stick it in Bitcoin. And so that's kind of how I logic around it, is my long-term holds. I even have a list of coins I call the God tier coins. And I love them, right? I think they're going to be great. But even they have, arguably bad performance compared to these gems, right? Like we're talking about coins that I found this year that have gone, 1,200% and more, while Bitcoin's done 150%.
I want to talk about those. I definitely do want to talk about them. So right now, as we speak to you, what percentage of your crypto investment money, not your wealth, but your crypto investment money, is invested in what you call the big coins, the God coins, the Bitcoin, Ethereum, DOT, and we'll actually talk about who you classify as those God coins. In fact, maybe you can give us some insights as to in your portfolio, who are the long-term holds, and what percentage of your crypto wealth is in them. And then we'll go from there into what the percentages that you allocate into the smaller trades, and what those trades and how you do those kind of things.
Yeah. So, I have way over 50% of my coins in the long-term holds. And that's because that's like your wealth, right? That's like your wealth building mechanism. But, the reality is I'm fortunate to have a decent sized portfolio, and you can't deploy too much money into these low cap coins, right? If you look at the markets, you'll look at a market, even take a not so small coin, like look at what happened with Cover, and they have about $3.5 million in trading volume. This was acquired by Andre Cronje, and the Yearn ecosystem, not a small coin at all. They had a big event where a lot of coins just traded hands. It's kind of high trading volume, $3.5 million for a low cap, right? you can't deploy $1 million into one of these things. You can't deploy $500,000 into one of these things, especially if you get a pop of 5-10x, right? You can't sell that, right? And so you can't deploy a ton of money into these small caps, right? You can only deploy, there's kind of an upward ceiling as to what you can deploy into them. And so that's why you really need to be doing your work to find a multitude of them so that you can deploy sort of small chunks into them, because you just can't put huge amounts of money into them.
So let's talk about what your big coins are, and then we're going to talk about your small coins. So obviously Bitcoin, Ethereum, I mean, those are, I think everybody in crypto, anyone that's in the ecosystem must have exposure to Bitcoin and Ethereum. Where do we go from there? So what's the next one? I think you mentioned Polkadot.
Polkadot's obvious. To me, Polkadot is pretty clear, right? It seems to be the flavor of 2020 in many ways. There's kind of reminds me of EOS a little bit. That energy has that big EOS energy of like, this is the one that is gonna really challenge Ethereum, and I love that, right?
Do you think it will? Do you think that it would challenge Ethereum? Do you think there is a chance that Polkadot will become, say, the third chain, or maybe, I'm not going to call it a competitor, because I think the way that Polkadot's structured, it's not designed to beat Ethereum. It's designed to work with Ethereum. But do you think that Polkadot is the number 3 project?
Yeah, that's a great, it's what I love about it is, I'm a little bit of a cynic, right? I'm a builder. I have my own projects, and I've built a lot of stuff. And, just like Charles, who was on before me, brilliant individual, and someone who you could like talk to for hours. But again, Guggen was supposed to come out in 2017, and, I'm a little bit like, I don't play the hoping game. I don't play the sitting and waiting and hoping game. I don't do that with my money, right? I don't do that with my money. I do that with my emotions, right? I'm happy to emotionally wait and say, wow, I think this might happen. But I don't bet quite literally on that. That's why I do the small cap strategy. But if you're asking if Polkadot can do that, has the opportunity, I'll believe it when I see it. I'd love to see it. I'd love to see this tech emerge. If you're asking if Cardano is going to do that, I'd love to see it, right? I'd love to see these things take shape. I'm kind of a big believer that Ethereum is kind of where it's at for a developer because of the network effects. And so, I think that Polkadot will be viable. I think Polkadot will do a lot of growth in market cap in these conditions. But do I think it's going to unseat Ethereum per se? Again, I'll believe it when I see it, right? I'll believe it when I see it.
So you've got Polkadot, you've got Cardano, you got Polkadot, you got Bitcoin, you got Ethereum. Let's carry on going through your big coins. And actually, I really want to spend much more time on the small coins because I think that that's where your forte is. But I'm trying to get a feel for the bigger projects that you're looking at first.
Yeah, I really like Polkadot. I like Kusama because they're a very critical part of the Polkadot network. There's several other projects on Polkadot that are interesting, much smaller cap that I look at as well. Gavin Wood actually covered his sort of projects to watch over the next few months. And, we'll talk about those in the smaller cap segment. As far as bigger caps, I really look, you can't ignore what Chainlink's up to and what oracles present in the space. And so I have oracles kind of as a unit there. But really the two oracles I'm most excited about are Chainlink as well as API 3. Now, the reason why I like API 3 is they were sort of a lead. And even though they're a smaller cap, their cap is it's actually a little bigger than it looks. And so, I consider them a little bigger cap, right? I consider API 3 a kind of bigger cap project. I don't consider it a low cap gem. And so I'd put it in that category. And then as far as data is concerned, you have a project called Ocean, which is doing some pretty incredible things. And so I believe what Ocean's doing is pretty unique in the space. And I think that they have a real chance to become the sort of leader, the Chainlink, the Ethereum of their sort of data marketplace sort of situation. API 3 on a nice juicy dip today.
Yeah, so I'm looking at API 3. You mentioned that there's a reason why. I think with you, it's inevitable that we're actually going to get into the small cap section or the smaller cap section of the show, because I think that's where your heart is. I think your heart is nowhere near the big Bitcoins, Cardanos, and Ethereums. So let's talk specifically around how you make the investment or the category decision. So you mentioned that you like the category of oracles. Tell us what you're thinking around why you're so bullish on oracles. And then I want to talk to you specifically around API 3 and why you think that API 3 is a good investment when you can just put your money into something like Chainlink.
Yeah. So you could just put your investment into something like Chainlink, it's several $billion dollars, big cap, has had a lot of legs and has an amazing community. Shout out to the Marines. Don't kill me, Marines. But the thing about it is it falls also into that category of significantly dependent upon larger macro factors. At this point, it's a huge cap, right? At this point, it's a massive cap. And there are several other people trying to eat up the little bits of that cap. And so to me, I have my bags of Chainlink. I'm not really adding to them, right? I'm not really adding to them. I'm just sort of sitting on them. If they go, they go, and they've gone a lot. And so, the reason why I like API 3 is I studied the tech. I met with the team. I knew about this project for months and months before it came to market. And these guys ran the biggest Chainlink nodes for over a year. And they saw the problems with the product. They experienced it. They tried to provide data. They tried to use it, right? And I'm big on utility, right? And so when you know what the actual issues are from firsthand experience, and then you design tech with the benefit of hindsight, you have that advantage. They actually have an advantage in some senses. Not to say Chainlink can't literally deploy something quite similar. They very well might. I've heard that they're working on first-party oracles as well. But I do think that there's something quite exciting about looking at something that's like 1/1000th the size of Chainlink with potentially an advantage.
So tomorrow we actually have an oracle on our show. It's called Bird Oracle. It's a very, very, very low cap. And that's another one of these oracle plays. Any other plays that you're looking at in the oracle space? Or are your bets basically placed on API 3, on Chainlink? And I bet you tomorrow after we speak to Bird, you're going to take some of your stack and put onto Bird.
Yeah, no, you made a great call on Bird several months ago, or several weeks ago rather. And Bird's fantastic. It fits into sort of the low cap oracle space that I've also blanketed, much like the insurance space. Another performer down there was Octo. There's also Ori. There's several sort of very small, very interesting oracle plays. Octo, we were talking about, I think at like $6, ended up hitting like 40 something, did fantastic. Again, de-risked that position and distributed some profits, and I'm happy with it. I'm not checking that. Those are those kinds of positions where you can get in early, study it, and then once it does its thing, you just kind of de-risk the position and let it sit there. And if one day in 2021 it's gone to $200, then we do a little dance. But I don't feel the need to check it all the time. I just, whenever they have news, it's great. And
all right. So the next token that you spoke about Ocean Protocol. Ocean Protocol is effectively a data protocol. I think they were incubated out of Berlin. I'm not sure if the entire team is still in Berlin. We met them when we went to Berlin. Quick highlights. What do you like about Ocean?
Yeah, Ocean, what they're doing for data marketplaces, sort of allowing for data marketplaces to exist in the blockchain world is there's not a lot of competitors to it. And we all know the power of data. It's pretty much what makes our modern internet run. It's the biggest business in the world right now, probably. And so to be focusing on that is fantastic. And Charles actually talked about, there's a few projects that have partnered with Ocean. What I like about Ocean is they're very specific about the projects that they actually partner with. Whereas Chainlink, anyone can sort of use their price feeds, and using price feeds is, everything needs price feeds, right? Does everything need a data marketplace? No. And so you're seeing a little bit more of a high quality sort of partnership funnel. And you're seeing from Ocean, projects that have partnered with Ocean have done fantastic growth. And I actually happen to love it because two coins that I discussed very, very early on in their life cycle partnered with Ocean, and you saw the effect was pretty resounding on what happened with these projects. One of them is called Parsec, and the other one is called Alliance Block. And both of those coins went from really small caps to pretty sizable caps. After the Ocean partnership.
So I want to talk to you about Parsec, because Parsec, to be blunt, it was a recommendation that I picked up off your channel, and then I moved it across to my channel and to my Twitter. And I was also an investor, I think much after you, but very much an investor in Parsec. What is it about Parsec that you like so much?
So yeah, this one goes back to being a builder, right? We've built on multiple blockchains, dApps, and after you've built on blockchains, you see what should be easy but isn't. You see the things that are if you're building a normal web product with normal access to APIs and sort of basic stuff that runs our internet. Then you look at what's happening on the blockchain and you're like, wow, there's so many tools missing for a developer that you have to sort of build around. Parsec pretty much just makes it's a bit of a painkiller, right? It's like, oh, wow, we don't have to build this. We can just literally tap into their blockchain monitoring tools. And it sounds a little bit boring, blockchain monitoring, but you know what it allows you to do as a developer is really, really nice. It saves you time, energy, and money. And you know, as someone who runs projects, I can tell you that time, energy, and money is all you think about as a developer and as a project lead. So I saw from the beginning that Parsec was a big painkiller for the devs, and that's what drew me to it.
And what I mean, so you look at Parsec. I mean, if you look at the chart that I've put on the screen, it's been hovering around 20 cents or whatever, and it's almost like it's 60 or 70 cents. In fact, if we look at the price of Parsec today, it's 60 cents. Too late for those who are watching here today and didn't take your call and then subsequently my call around Parsec. Is it too late, do you think, to get in now?
Yeah, it's really hard to say. I don't think that it's too late, right? Because it's one of those things where Parsec if things keep going in 2021 as it looks like they will, Parsec could be orders of magnitude bigger. It also just went on a parabolic run, so you have to factor both of those in. And you know, usually you want to let things kind of sizzle out a little bit, but before you kind of like jump in after, you know, what has it done, like a 6x or something in the last couple of days. And so you got to be a little, I've never really had amazing success jumping into things that have just gone parabolic. But then again, I'm kind of a little partial to Parsec because it's kind of like it's almost like a child of mine, you know, like I feel like
it's not a child. It's your favorite child. I mean, every time I have a conversation with you, somehow Parsec comes in. It's almost like you discovered or you found this kid and you've made this your child now, and your favorite child, not your child.
Well, to me, I like to see good tech win, and I picked them because of their tech. They have there's no reason, there's no special privileges that they had. They don't have any big VCs. They don't have any big backers. They don't have any like known CEOs. They didn't have any big influencers. They didn't have anyone behind them and that was helping them cut the line to success. It's just the product that I liked. And so that to me is like, I think a good signal for blockchain in general and the industry in general. And that's what's sort of fun about the channel is now I get to take, you know, my vision of what should be valuable and share that. And more people are starting to see the world through my eyes. And that's one of the most fun parts about finding these early projects. And so Parsec is just one of these projects, but I think it's a good example of the type of mindset that I want people to have, which is finding the best tech that people who are executing, people who responded to a few crises, they did it well. The price continued to tank for a very long time, but I believed in it constantly, and eventually they got their reward.
Yeah, I think I agree with you on that. And then one that I must say I saw the research, and then you did an amazing video about it, amazing program about it, was KeeperDAO. Now, this is something that everybody should be listening to, because when you look at the gas fees and the gamification of the gas fees that the miners can do, et cetera, that is a massive problem. It's a massive barrier to building on top of Ethereum. As much as Ethereum does have network effect, the one thing that's not working for it is the gas fees. And I think KeeperDAO kind of solves that problem as a novel approach at looking at that problem.
So yeah, KeeperDAO is one of these projects where it takes you a while to understand it, and you can't oversimplify it. It takes a while. You got to work through it. Especially for people who aren't so familiar with how the blockchain really works, right? And you got to learn it. It's one of those projects that you evolve as you study it, because you're like, oh, wow, I didn't even know how that was working. But once you understand that, you know, before transactions are executed, they go into the mempool, which is like a purgatory for transactions, if you will, before they know if they're going to get written or not. And when it's sitting there, there are people who are really smart, you know, the really sophisticated, smart, and potentially predatory folks out there that say, hey, look, they're going to go and try to buy this on Uniswap. And they've put their slippage up, so they'll accept a higher price. So what if we bid a little higher on gas, push that price up, and make them buy the token from us, right? And so all of a sudden you can have people kind of seeing your transaction before it's born, before it's written, and they start, exploiting based on how much gas you attach to it. And so there's all these games that can be played.
They're front running your transactions, and they're profiting on the front running of your transaction fees.
Exactly. And that game is forever, right? There's a front running game that's going to be played for a very long time. And I don't see that going away too soon, even with lower gas fees. But what KeeperDAO says is, hey, look, you're front running and you're front running. But guess what? You guys start competing to front, like pretend I'm the guy who's getting taken advantage. Like they're taking advantage of my transaction. But then you have Ran, and Ran says, oh, well, I'm going to front run this because I see I can make a buck off this. But then you have Charles. Charles comes in and goes, you know what? No, I'm going to front run Ran. And what happens is that Ran and Charles start competing to front run me. And eventually, by bidding up the price of the gas, they end up eating away all the profits. And all of a sudden, the opportunity to make a buck off Elio goes away. And so what KeeperDAO says is, hey, look, instead of you guys competing to front run Elio, let's all take turns and let's work together. And let's make sure that every time some dum-dum like Elio allows himself to be front run, that we maximize the profits off that, and that we allow everyone to take turns and share in the maximal profits. And this is this kind of crazy big brain approach, this 5-head approach, if you will, that really I loved, because you're saying that, hey, you're playing into the selfish nature of these front running folks. You're playing into the selfish nature of the people who want to maximize profits and front run off the less knowledgeable. And instead of saying don't do that, you're saying let's do this and make more money off of it. And it's a really brilliant approach, and it's all about game theory and understanding psychology. And I think that the real big brains and the real predatory big brains out there will really gravitate towards this. That's what I liked about it.
Yeah, 100%. I must say, I think it's a big problem. I also know that it's got some very, very, very big backers. And unlike some of the other calls, this one hasn't had a huge run. I think when you first started looking at it or started posting about it, it had a market cap of about $16 million. It's gone up about 40%. I mean, I haven't looked at the latest market cap, but I mean, I think it's still got a ways to go. So probably worth doing that. And if you guys do want more information, go to ELLIOTRADES' YouTube channel. He has got an amazing video out there. Let's talk about one or two.
Before you finish, Rook is still in an emission phase, and that'll continue through about the middle end of January, where essentially people are using the service to generate and emit Rook, and it's costing them. It increased recently because a lot of new attention to the Rook token. But it was about when I first found it, it was about $60 that would have cost to emit a Rook. So any pop that happened above that, people were just arbing. They were just literally doing arbitrage to generate some return. And so for the next couple of weeks, the price is actually under a bit of suppression. And so that's something to keep in mind, is that it's not behaving normally in the market yet.
That's until I think just after the middle of Jan, so 20th, somewhere around the 20th or somewhere around there in Jan, and then I think that it's going to be a steady price climb. I want to talk to you about one or two more tokens, and I want to go into themes with you, and specifically the one theme that I really want to spend time talking to you about is NFTs. Because great. I think that we've seen Bitcoin store of value, we've seen money, we've seen smart contract, we've seen DeFi. And I think that the next big bet is around NFTs. But let's talk about one or two other gems, maybe some gems that you're looking at that you haven't yet published a video on, or something that you're thinking about, maybe just to give our viewers a little taste. And of course, if anybody does want to do that, you can go to ELLIOTRADES' YouTube channel. He has an amazing YouTube channel, which we'll post in the link below. And you guys can go and join there. He also has a Telegram group, a huge Telegram group. I think 15 or 16,000 people in the Telegram group. Releases a video almost daily, and it's always about these mostly about these small cap gems. All right. So what else are you looking at? We're looking for a gem. We're looking for that, like the gem hunter.
Yeah. Right now, it's a bit funny, right? Where everything's been sort of exploding in price. And so, there are some opportunities, but a lot of the ones that I've put out there have performed. And so it's not exactly, I don't have a gem up the sleeve that I really want to cover right now on the channel, but I will tell you where I'm looking in general, because I think that's, one of the things I really like to preach on my channel is how I find things, right? It's not just here's a fish. It's here's how I found this. Here's how I found this, and the more I've done that, the more I've seen people come back to me saying, "Hey, Elio, I did your process. I went through and I went through your process and I found this." And the more I've seen people sort of come back to me with fantastic projects, and I'm seeing that my community has become a rich source of wealth and knowledge. And One of the things that I'm looking for right now is I think that there's been a big suppression on Polkadot. I think you're going to see a lot of really interesting stuff happen on Polkadot. I think you're going to see a lot of really interesting things happen in insurance. I think you're going to see a lot of really interesting things happen in NFT. And for the most part, I'm always looking for something that has not just become a copycat noisemaker. And so looking for originality to the biggest degree possible. And that can happen in degree, right? There's a project called Bridge coming out soon in January. I think this thing is going to be hugely undervalued. I'm also worried that the launch is going to be overly competitive because there's just going to be so many. I kind of made this thing pretty well known since a couple of months ago. But the way they're doing the voting for the insurance, they're an insurance protocol on Polkadot as well. So checking a lot of boxes. And then they also are doing this very interesting way to vote. And if you think about what insurance is, you essentially have people who say they've been harmed and they say, hey, I have a policy, I've been harmed. I want to collect. And then you need a process to determine if that person's being honest. And then beyond that, you need a process to determine if that person or how much, if they have been harmed, should they be awarded. And so there's a lot of decision making that needs to happen in an accurate way. And so it's not just a simple yes, no. And it can't just be the people who own the most of the token because they're incentivized not to pay. Right? If you're constantly paying out, if you're saying, hey, I own this token, why am I going to pay you out? Why am I going to pay you out? So there's got to be incentive balances. And if you think about it, a complex and nuanced voting system is really a very important innovation. And so that's why I really like Bridge. And there are many other gems that will be coming to the channel, but you'll have to tune in and subscribe.
Yeah, I must say, I'm also an investor. I'm an early investor in Bridge. I must say, I do like exactly what they're doing. They've got the system where they monitor how the delegators or how the deciders actually vote. And based on how smart their voting decisions are, gives them more and more kudos. So it means that if you're always a contrarian and you're always saying, no, we're not voting with the majority, effectively what happens is you start losing your clout and start losing the amount of money that you earn. And so the spiral continues. And so they get a very powerful momentum of good decision making. And that's, I think, really where the beauty of this protocol is, that they get momentum of good decision making. They take all the bad decision makers and they remove them out the system very early. And so what happens is they just get much better decision making every time they do something. It's a very similar system to the Indian schooling system. The Indian schooling system says that if you do well at your school, you move up to the next school. And if you do well at that school, you move up to the next school, which is a better and better and better school. And they create this momentum of the cream rising to the top. And that's the problem, or that's what Bridge has actually solved. We are running out of time, but I do want to spend time talking to you about NFTs. I know that you're involved in an NFT project, and I think that what we're going to do with your specific project is that when you're ready to talk about your specific project, we'll actually cover it on one separate show where we talk just about your project. But the NFT space really excites me. And I think that it excites you just as much as it excites me. Tell me a little bit about your outlook and why, out of all the things that you could have chosen, I mean, you've been in the crypto space for a while, you understand it a lot, you make a lot of investments, but ultimately where you spend your time, effort, energy is actually building an NFT project. So tell me a little bit about the thinking there.
Yeah, to me, NFTs are just they're the most versatile asset, right? And it's the hardest to understand. Like people, it's laziness that keeps people out of NFTs to a large degree. But NFTs are just a wrapper. You can wrap anything in an NFT. It can be a single, it could be just a pixel on a screen. It could just be a piece of art. It could be a very complex sort of, basket of tokens. It could be, something that you can actually use in a video game. It could be like a key that you use to unlock certain privileges and access. The promise of NFTs to me are fantastic. The reason why I am personally focused on them is because the NFT is the perfect entree, in my opinion, to the big user base. And, we see this, I was having a conversation with a really smart, colleague of mine that's been working with me on my project. And we talk about DeFi, and DeFi is quite, in its essence, it's for the whales. It's for the big bag holders, right? It's for the big money. DeFi is a plaything for whales where they can go lock up their crazy funds, get rewarded with insane APYs, They can earn yield on huge amounts of money, and they can sort of take their wealth and multiply their wealth. And a lot of the DeFi stuff it's exciting because those token valuations can be very, very explosive. So there's a lot of money to be made for the small fish as well. But fundamentally, it's an appealing thing for the big whales. Now, if you look at the small folks, the high school kids, the new generation, the types of people who 20 years ago would have been adopting Facebook, would have been adopting Instagram, or I don't know if it's 20 years ago, but about there, right? 15. That crowd has nothing in DeFi. There's nothing for them, right? Because they don't have wealth to go multiply, right? They don't have the wealth to go multiply. So there's nothing for them to do here. So you're essentially, instead of playing a game for the ultra minority, NFTs can serve the ultra majority, right? And you're saying that, hey, these types of assets can be built into products like video games is the number one for me. Video games recently have become bigger than movies and sports combined, right? And so you're looking at the growth of the video games industry. You're looking at how it monetizes. People are buying digital clothing, right? They're buying digital clothing for their characters to the hundreds of billions, almost $200 billion. Not just like market cap. That's new money flowing every single year. And so I don't like to change the user. That's part of my core tenet as a builder. You don't change the user. You build towards the user. And what we see is a resounding evidence that the user wants digital assets inside video games, but also other places. And so they don't necessarily want to speculate. They want to own stuff in a digital world. And so I'm fascinated by this. And I'm also obsessed with the idea that the product that actually captivates that behavior in a product that these kids, that this next generation enjoys using, is the key to 1 billion users.
So I must say, I do agree with you. I think that there's a massive digital use of NFTs. And I think video gaming, of course, is the best part of it. I think it becomes much bigger than that. I think it becomes much bigger than that. And I think the crossover is when you take real world assets and you start adding NFTs to it. And we spoke about this yesterday on my show, but one of the things that I've actually seen in this industry is wines, and people talking about when you buy a very expensive bottle of wine, it's accompanied by an NFT, which is the one unique story from the winemaker about the wine. And that NFT also stores the history of how the wine was made. And so what happens is when you finish consuming the bottle of wine, you still hold the story behind it. And when you start taking that and moving it to art, luxury good, handbags, the next part of an NFT, which I really like, is concert tickets. And I use the word concert tickets, but it's actually not a concert ticket. It's the first part of your concert experience. So when you buy a ticket and you have your unique ticket, which eventually I believe will start being personalized to you, when you finished at the concert, you still hold the NFT, which is the memorabilia. And I think what happens then is you start getting this explosion in the world of NFTs. And the way that I see it is NFTs will, of course, start with the video gamers. Just like digital money did. If you the history of digital money started with the video gamers, these guys are way ahead of their time. In fact, Brock Pierce, how his entry into crypto was through the digital gaming space, and he was mining these digital coins, etc. And so I think that the fact that these video gamers today are starting to talk about NFTs and buying these skins, which actually do nothing to the game, they just make you look better while you're playing. That tells me that the next wave of adoption after DeFi or in parallel to DeFi is going to be NFTs. And I think that's, for me, one of the biggest themes of 2021. I think 2021 is going to be the year of NFTs.
Yeah, and I completely agree. Just to piggyback on that, the other benefit I see is because of regulatory concerns, right? Charles brought that up. But there's so much precedent with things like baseball cards, with things like collectibles in the real world, that the NFT to me is the furthest moat that's protected from potential regulatory enforcement. It's a non-fungible. It's in the name, right? It's in the name. It's not fungible, and so
it's not going to be a security. There's nothing wrong with the way you sell it. You're just selling a base. You're selling a baseball card that's digital. So yes. I think there's no regulatory risk. And if you remove the regulatory risk, I guess the only thing that we then have to do is start making them very, very, very user-friendly so that there's no barriers to entry, that people don't have to start thinking about private keys and stuff like that and how they actually store it. But I think that 2021 is going to be the year of NFTs. And I think that's something that we're going to talk about. So I think to sum it up, for the two of us, small caps is where we're going to look in this next altcoin market. And then, of course, I think we're going to be looking at NFTs. And what I'm going to do is I'm going to get you back on our show to talk about both. And I don't know if it is time to let the cat out the bag, but I would say that it is that Elio and I do have something up our sleeves. It has got to do with small cap hunting. It's something that we're going to launch together to help you guys navigate the world of small cap altcoins, something that we are going to bring to you later in the year. Elio, any closing thoughts, or should we chat again after the next 3 days of 2020 and into 2021?
Yeah, I mean, thanks again for having me, Ran. Really looking forward to chatting about this. I genuinely believe, that finding and learning how to find the small caps forces you to grow and educate yourself. But also, I think it's the more beneficial thing for your portfolios. I believe it strongly, and that's why I try to talk about how to do it. And I see that you've really evolved on your approach too. I remember seeing your content back in the day, and it seemed like it was focused more on sort of the trending top coins, whereas now you're really deep in the small caps. And I feel like that's beneficial to the community as a whole, understanding that getting in early is really a part of the game. And so I'm really excited. I'll definitely be happy to come back and help let the cat out of the bag as to what we're planning. But again, just thank you for having me, and I promise next time I'll have a few unreleased gems for you.
Amazing. And just quickly for our viewers, if anybody does want to get your content, your videos, newsletters, everything else, what do you recommend? What's the entry point? Where should they go?
The easiest thing is my YouTube. I say all the time that on my YouTube, if you have the notification bell on, ELLIOTRADES crypto, ELLIOTRADES, then you will be the first person in the world to know exactly what coins I'm looking at, which projects I'm excited about. I try to really make sure that there's no VIP groups, there's no special paid, consultants or chats or anyone who really knows. Even my research team, I don't tell them what I actually cover. I purposefully keep it as opaque as possible because I really want that notification bell to be your entry and your ticket to having the best knowledge for free. So make sure to like and subscribe to this channel.
Subscribe, bell button on my channel, subscribe, bell button on his channel. I'm a big fan of the Telegram group. There is a lot of noise there, but if you do have time to sift through the noise, it's an amazing place to be. And then, of course, all the videos that he brings out, we are going to start doing a lot of videos together, but there's a lot of videos that he brings out. A very different format from this show. He spends a lot of time, Ilya spends a lot of time going into the depth of every token, the tokenomics stuff that we don't really get time for on this station. Elliot, thank you so much. We'll see you again in the new year. It's time for us to go. Thank you very much.
Thank you, Ran. Thank you, everybody.
Thank you, guys. And if you have enjoyed this, hit the like button, hit the subscribe button. Give me a little bit more love, and let's get this content out to other crypto enthusiasts. Otherwise, we'll see you again tomorrow. And that is for the last show that we're going to be doing this year. We've got a jam-packed show for you tomorrow. We've got Mike Pichello from Block Tower Capital, and he's going to be talking about Bitcoin in 2021 as a big macro theme. We've also got another small cap for you, Bird Protocol, which is an Oracle protocol called Bird. Very excited to have those guys on. I have been calling that token for a while. And then one or two other surprise guests, which we'll bring to you tomorrow. So I'll see you again, same time, same place tomorrow, right here on CryptoBanter.com. Thank you very much for joining me. I'm Crypto Man Ran, and you've been watching CryptoBanter.com.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research. That's the end of our live show. Thank you for calling in and tuning in. Head over to CryptoBanter.com now to access all past recordings and engage with other listeners. That's CryptoBanter.com.